All right, good evening, people. We should be live. It's the 26th of November 2025. The time is just after 8 p.m. UTC. Give me a quick hello, audio checking the voice and that you can see my screen. Apologies if there's any streaming issues on today's session. I have some dodgy internet, but hopefully it'll hold stable. But if it cuts out, then tough shit. What can I do? Just give me confirmation that you can see my screen, please. Yes? All right, brilliant. So in today's session, it's going to be a good one. I feel as though, look, in some respects, crypto has been a disappointment for many people. Outside of Bitcoin, outside of Ethereum, we've seen many altcoins that have been lackluster. Meme coins had a good run, right? At the end of 2023 into 24. We've seen a few altcoins that pop off every now and then. Hype has done relatively well. But it's fair to say that for the best part, the majority of the last 12 months has been frustrating for many people, in terms of when it comes to trading altcoins. And I think that it's a beautiful segue in today's session where I'm bringing on the legendary WMD4X, one of the guys who I used to look up to and I still do look up to as a trader. He's somebody who's been around the scenes for the best part of 15, 20 years. He's traded various markets. He's probably been there, done it, seen it all, got the t-shirt. So it's an honor to bring him on the stream, which we will do shortly. But before we do, a special thank you once again to Prime XBT, where you can trade crypto, commodities, indices, CFDs, FX, you name it. The chances are that you can probably trade it on Prime. So a special thank you to Prime, once again, who have been a lifelong partner with me for the best part of 4 years since September 2020. And as always, anything said in today's stream is not financial advice. It's just my view and WMD4X's view of the markets. And take note, get some pen and paper, because he will be sharing the foundations of his equities process in due course in this video. Before we kick off the stream, I just want to give a special reminder to everybody and anybody who's actually wanting to join the mentorship that I've been running and I will be continue to run. Okay, so I'm going to be accepting, let's just say there's some places available from December onwards through to the end of March. In terms of signing up, okay, so like I said, it's not a paid group. It's in partnership with Prime. Now, all it is, you have to sign up with Prime using my referral link and you'll get access to the group. That's pretty much about as free as it's going to be. It's your money, your funds, you get to trade it. I'll be sharing the educational pointers on private streams. And the way to access that, it's going to be in such a way that from tomorrow, come to my Twitter page, click on the link tree, okay? And on here, there will be a link that will direct you to sign up to Prime XBT under my referral code. And then below that will be the Google form for you to, once you've signed up, once you've deposited and met the criteria, fill out the Google form. And then from next week, I will start adding people to the group. Okay, it's going to be open for the next week or so, and that's it. I'm going to close access to that because it takes an absolute ball ache to add everybody manually one by one and to ensure that, there's teething issues as well. Some people have issues with signing up and whatnot. Now, I can appreciate that some of you won't be able to sign up due to KYC restrictions. Please bear with me. I should have an alternate solution for those of you who are interested in joining. But again, further information for that will come out next week. But if anybody's interested, spots will be limited. The windows there is going to be open for a couple of weeks, and that's it. And then we'll close the window. And then what we will be doing in the group in December is going over my trading manual for 2026 and some of my trade sheets that I'm revamping. And I'll be sharing those resources with you. And don't forget this, the course that I've been doing in terms of you'll have access to all the videos there. Okay, so that will only be running until the end of Q1. After Q1, I'm probably going to take a break. All right. So again, just a reminder, that is free. Let's kick off with today's session and see if the legend is there. Will, are you there? Can we get a quick mic check? How's your day been?
Yeah, not too bad. Mustn't grumble.
No, that's good. Audience, can you all hear the legend on chat? through the mic. If you can, then we'll kick off the stream. Just give me confirmation, please, in the chat, and we'll get kicked off. There's always a delay of 4 or 5 seconds. Yep. All right, brilliant. They're all saying, yep, it's fine.
Cool.
So first things first, like I said, I think one of the key aspects for me was when I first started trading. Here's a backstory. I started trading. Well, I first bought Bitcoin in 2016, and I actively started trading in 2017. Made a lot of money through altcoins. You know, Neo, AntShares, Amigo, Lisk, Stratis, to name a few. Even XVG, Verge. But then, come 2018, after February, March time, you know, one of my biggest trades was Z Classic. You know, the whole notion around privacy. But after March 2018, April, May, you know, that long period of Bitcoin going sideways between that 6 to 8K range, and being overly bullish and overly exposed to the market was a costly mistake. That kind of crushed me in some ways, because I remember when we dropped down to 3K in November 2018, I suffered something like a 60-70% drawdown because I was heavily in altcoins. And I think one of the key things that I was looking at, I was looking for trading mentors, and I think for me, one of the most important aspects of turning points was not only did I, you know, go through some of like Trader Dante's videos and creating a training manual, but it was really thinking about the game. Where I remember you doing a Cresco challenge in 2019, and I think it was from February all the way through to October. Where you, what did you return in terms of percentage? Was it something like 10,000% over 62 trades or 63 trades? I can't remember the exact figure, but you probably know more than me. What was it that you returned on equity?
I still remember it, man. It was like, I think 2,220% over 6 months.
Okay, 2,220%. Yeah.
Like started with 1K and ran it up to about 22K in P&L, right?
Yeah, yeah.
The problem we're going to have here is there's a lot of crypto natives here, probably, and no one is going to appreciate how much of a son of a bitch mission that is trading Euro USD, right?
Yeah,
or
yeah.
GBP, right? Because these are like low vol instruments, right? You've got an instrument that moves 0.5% in any given day, right? At
Yeah.
best. And yeah, it was quite a ride at the time, and I think in terms of FinTwit, there were a lot of legacy guys around at the time, and I think people really kind of sift the wheat from the chaff at that time, right?
Yeah. I think it was just inspirational for me to see that here's somebody who's only taken 63 trades over an 8-month period, literally averaging just under 2 trades a week. And that really made me question the need to always be in the market. And honestly, I swear down, this was one of the biggest mental turning points for me, was just slow down and really identify high time frame levels, high time frame trades. Why am I trying to be in every trade every single day of the week? Why am I trying to look for opportunities? Why am I feeling as though I'm missing out? And I think that's the issue with trading Bitcoin. There's a very heavy emotional burden that comes with trading Bitcoin. But once you step away from Bitcoin and you start trading Euro USD, you start trading GBP USD, you start trading FX, it's not like you need exposure to that market all the time. And so really where I think the conflict happens is because so many of us want spot exposure to Bitcoin, but so many of us at the same time, especially in that era, wanted more Bitcoin. So the only way we could really see of obtaining more Bitcoin as opposed to pouring our own capital in was to try to trade our way there. But doing that, obviously, 90% of traders fail, including me. I've donated a few Bitcoin to the BitMEX insurance fund back in the day, but lesson learned. And I think that's the key for me. You say it's 1K to 20K, but what people don't realize is that it's not necessarily about the end result. It's the process that gets you from A to B. And that's what really stood out to me. And tell us about your, for those of you who are fairly new to the trading circles, you're quite the legend. You know, you're somebody who I highly respect. You're somebody who SE highly recommended to me when I was starting out, even though, SE was one of my mentors, and he told me that you were also his mentor at the time, many, many years ago. Tell us about the legacy, the time when you first started, and how that's evolved into who you are today as a trader, essentially. Give us a quick 10,000-foot overarching view of that, please.
All right. So I'm going to kind of, you know what's going to happen. I'm going to end up going, I'm going to go vertical and horizontal in this in this discussion, right? But I've just had a thought which has kind of popped into my mind, right?
Sure.
Because I one thing I always kind of think about, and because I do mentor people just like you do, you know, you're mentoring a lot of people, and I think as you go into that kind of mentor mindset, right? Because as you do, you kind of develop this mentor mindset where you're kind of trying to change people and to have an impact on them that's going to be positive, and to change effectively their behavior and remove their demons and kind of get them climbing the ladder to where they want to be. And the way I usually kind of think about things is I start with a question and say, look, why do people fail? Right?
Yeah.
And if you can understand why people fail, then what you can do is you can build systems and processes and frameworks, and you can find a way around that so that people don't hit those obstacles and they don't hit those blocks, and you kind of get this then this transformative effect, right? And I think that's something which is I mean, you know, in real life, people tend to do it, right? If you're going to go out and start a business, whatever business it is, you're going to kind of look around and say, right, who else is doing this? Who's doing it well, and why are they doing well? But if you want that complete 360 perspective, you've got to kind of look and say, who's failed at this and why did they fail, right? Because you don't just want to be doing the right things, but you also want to be avoiding the things that kind of lead to that catastrophic collapse, right?
Yeah.
And so there's a thought which is just kind of striking me right now, right? That the bad trading advice, right? And I'm going to be a little bit careful here, right? Kind of say bad trading advice. I think the problem with trading advice is it's all contextual, right? And quite often what happens is someone will give you a piece of advice without the context, right? So even if you look at something like trade management, right? Someone will say, don't move your stop loss, right? A trade either goes to profit or it goes to stop, right? Now, if you take that as a hard and fast rule, you're screwed, right? If you take it within a specific context, you'll understand there's a time to apply that rule, and there's another time where you can kind of completely ignore it, right?
Absolutely.
And so if we kind of so here's one, right? Quite often, a lot of the time, what happens is that when people are setting out trading, they will come across this at some point, and people can kind of confirm it in the chat if they want, right? But at some point, someone's going to come to you and say, you need to find a system that suits your personality.
Agreed. Yeah.
I don't know if you've ever been told that, bro.
Do you know what? I hadn't been told that, but I self-discovered that when I saw your tweet, and I've actually found it.
Yeah, because I'm about to negate it.
It's interesting, but you hear people talking about find a system that suits your style, but nobody really tells you what that means. Does that make sense? Everybody talks it, but what the fuck does that actually mean? And just before I let you kick on, here's a tweet that I was referring to. This was in December 18th of December 2018. You probably can't see this, well, it's on my screen that I'm sharing, but you can see that this for me was a massive turning point, because I wrote a Substack article about this, was that when I stopped trading in November 2018 to do my trading process, my manual, literally building everything from the ground up, this was one of the core reasons as to why I went into, right, I'm only going to trade the high time frame ranges. And I think when you look at Will's performance here, his profit was 22,000, deposited $1,000, withdrawals 23,200, 71 trades with a profitability of 61% and a profit factor of 2.3. And if you look at where you started, this was on February the 22nd, all the way through to, well, your last trade was around about September, October. That to me is phenomenal, because you've just taken a 1,000 account to 22,000. You scale that up. You scale that to 10,000. then you're hitting 220,000 had it been a $10,000 account. But like I said, it's not about the notional P&L. It's about the journey that gets you there. Is it scalable? And I think that's what really impressed me the most, was the fact that 72 trades over 9 months or 8 months or 7 months, ridiculous. But it just showed that the quality of trade selection that you were taking. And obviously we don't know what the process was thereafter, because were you adding to winners? There's a whole level of position sizing, which we never get to see. But again, that for me was a phenomenal thing just to see at that time. And yeah, like that for me was a big game changer. But I'll let you continue. Sorry.
That's okay. So coming back to the kind of thought which I was having, right? Is like you find a system that suits your personality, or find a strategy that suits your personality. Um, I think that the idea is something that's just kind of completely upside down, right?
Yeah.
Because look, there is not a system or strategy that anyone has ever put together that will suit your losing ass personality, man. Do you kind of know what I mean, right? It's
Yeah.
like it's you have a goal, right? Which is you're trading and you want to trade profitably, right? So what you have to do is to change yourself to match a strategy that works,
Absolutely.
right? You're
Yeah.
never going to find a strategy that matches what you need, right? If the only profitable trading strategy in the entire world requires you to be up at 4 a.m. every morning in order to position yourself and put a trade on, then you have to be up at 4 a.m. every morning, right? You can't say, hey, well, man, these early mornings, they don't suit my personality. I need to find something that allows me to work, between 2 p.m. and 3 p.m. in the afternoon, right? Do you kind of see what I mean? And so I think, like, sometimes when people are kind of getting into trading, or they're looking at strategies, or they're studying systems or whatever, I think, the bulk of the performative uh, the performative aspect, improving performance, is about you adapting yourself to suit what the market requires, rather than you hoping that the market will change to adapt to what you require, right? So
Yeah. Yeah.
it's it's a little bit of a different way of kind of looking at it. And that's something that I've kind of experienced in my own trading journey. When I first started trading, I was trading gold almost exclusively, and I had a really good run. And then I had, man, like, that instrument floored me and it scarred me, right?
Yeah.
Okay, so, I made a lot of money and then I lost a lot of money, right? And then I had to find my feet again. And then I found my feet in FX, and then I found myself looking again at precious metals, and then I was doing oil and gas for a while, and I did a little bit of index trading and a little bit of stock trading. When crypto kind of came to the forefront in 2017, right? The first time when it kind of ran up to 20K, I was a massive skeptic, right? It was just
Yeah.
like, I'm a boomer, man. I was kind of looking at it thinking, what the hell is this shit, right? How the hell do you price anything?
Yeah.
It's
Yeah.
like, it's that kind of typical boomer thing. Look, I'm the guy when the iPods came out, when Apple released their iPod, right? I kind of looked at it and thought, that's never taking off, right? And it goes on to be the largest selling product in the world at the time, right? It's
Of course.
like, so I just kind of had that boomer skepticism, right? I was kind of looking at Bitcoin thinking, nah, that's not me. Um, Over the course of the next couple of years, I was kind of following crypto, and the odd kind of short here and there, if only just to annoy the entirety of crypto Twitter, right? I'd kind of see an opportunity where I felt Bitcoin was topping off, and I'd short it and I'd call it, and then I'd have people kind of coming after me, right? But
Yeah. Welcome to my world.
well, I mean, dude, like I still have the DM saved, right? I still have the DM saved, right? So it's like
Yeah.
death threats, and
Yeah.
it's just kind of weirdo people, man, right? But at the same time, I was getting a little bit of a rise out of it, right? It was just kind of funny because crypto was falling from 20K down to 3K, right? And I think people were really kind of struggling at that point to control their
Yeah.
emotions. They were kind of crypto natives who kind of had this long only perspective.
Honestly, I was one of those people. From 6K to
Yeah.
3K was fucking soul crushing. It emotionally, mentally, it just sent a lot of people, including me, not into depression, but really question like, how did I fuck up so badly from being high six figures to like, fucking hell, I'm almost back to where I'm started, but thankfully I'm not. You know, here's my saving grace. I can still make something of this. But yeah, it was soul crushing.
No, no, I can imagine. I can imagine. So, I mean, but here's the thing, right? Come 2020, right? I had to make a shift, right? And I actually became kind of full on crypto, right? And I mean, crypto trading became around about 90% of my exposure at that time, became 90% of my volume, right?
Why was that?
In
Why do you think that was? What shifted you? Because you look at the likes of SC. You know, SC comes from a very strong indices, commodities, FX background, and then he kind of jumped into Bitcoin and blew up on Twitter in 2018. Like, became the go-to guy when it came to price action trading. But you say that you kind of came into the fore in 2020. What was it? What was it that kind of got you sucked into crypto at that point?
So the systems that I use, right, my kind of bread and butter viewpoint of the market, the systems that I use, they rely very heavily on volatility, right? So the more that price is moving, the better chance that I have that my system will pay out, right? Or the general kind of approach that I use to trading markets will pay out. And what happened headed into 2020 was where my mainstay was kind of FX. Um, the volume was just drying up in FX, and your daily ranges and weekly ranges were just kind of becoming smaller and smaller and smaller. They're kind of starting to coil and compress, right? Whereas and then I was looking at Bitcoin and I was looking at a bunch of alts at that time and seeing that prices moving around 10% in a day, 15% in a day, 20% in a day. And there was a kind of realization that if I don't shift from trading FX into trading crypto, I have to move to where the volatility is. What's going to happen is I'm going to spend the next 3 or 4 years suffering during a drought, right? Because the instruments that I'm looking at just aren't paying anymore. They don't move enough to be able to kind of give that give or generate a return, right? And
Yeah.
so and so at that point, it just kind of became uh, it was kind of inevitable, right? I had to shift into crypto. If I didn't shift into crypto, what it meant was that I'm not going to eat, right?
Yeah.
Uh, and there wouldn't be food on the table. So and then at that point, I kind of started making that head-on uh, transition into crypto, and this is where uh, things started picking up again, and my book started picking up again, right?
Yeah.
So
Yeah.
you kind of have to go to where the volatility is, right? You can't become
Uh,
ideological
yeah. Uh,
a specific market or trading a specific instrument. I did gold for a long time. I shifted into FX. I did FX for a long time. I went into indices. I went into oil and gas. I did a little bit of stocks and shares, back to indices, back to, but and every time when I was shifting, I was just going to wherever the volatility is.
agreed.
And and around about that time, 2020, it was where's the volatility? It's in crypto, right? It just
Yep.
doesn't
Yep.
exist in the instruments I'm trading anymore. And then you kind of have to make you have to make that shift, right? And I had to eat dirt, man. I had to eat dirt when I came to crypto because
I think
it's
no. I'm just.
I was a skeptic, right? But
Yeah.
it's
Yeah.
at the end of the day, where you have to be really kind of careful, and this is what I always advise people is I say, look, you have to be ideologically money, right? You can't be ideologically Bitcoin. You can't be ideologically ETH or Solana. You can't be
Yeah.
ideologically FX and Euro USD and GBP USD or
No. No.
SPX or you just go to where the opportunity is, learn to recognize what opportunity looks like, and then go to where the opportunity is, right?
Yeah.
And if you look at a lot of what I've been doing this year, it's hardly touched crypto. It's hardly touched FX, right? It's like most of the big trades that I've been taking this year have been on US equities, right? Because
Yeah.
it's low-hanging fruit right now,
It is.
right?
It is. It is. Yeah.
It's where the volatility is, it's where the easy money is, right? And so I transition, right? My whole personality changes and becomes about something else.
It does. Yeah.
I'm a trader. I'm in it for the money,
Yeah.
right?
I just want to touch upon one point in what you said, just to summarize for the users. I think when you join various trading groups and trading courses, nobody really talks about the fact that for a good strategy or a system, you've got to understand the volatility regime first. Only then can you develop a system. And just to emphasize what you said, it's like, take for example myself. Why do you think I've shifted to trading Zcash these last 2, 3, 4 weeks? Because the volatility is phenomenal. It zips around. Even during a phase where Bitcoin was breaking down and there was a clear downtrend, here was a market that where my strengths are as a range trader, trading a range. So it's about shifting to the markets that align to your personality, that align to your style, and that's why Zcash is the main asset that I've been trading the last 4 weeks. But and I think you've hit the nail on the head. And I think what's good about today's stream is that segue onto equities, because we've seen frustratingly how disappointing alts have been. Yeah, in equities, everything has been taken off from robotics to AI to whatever it is, graphics card, Intel, AMD, you name it. It's all been rallying how altcoins used to rally. But before we move on to equities, I hope you don't mind me interrupting you. We'd love to get your thoughts on Bitcoin in terms of the charts and let you wrap up on anything you were going to say. But yeah, let's also hear your views about Bitcoin moving forward here. What your thoughts as well?
So I think when it comes to Bitcoin, I kind of have very limited opinions right now, right? And the reason for that is just where we are in the year. We're coming up to the end of the year, and my usual kind of approach, and it's a very kind of generic approach from the beginning of the year, right? Where what I would ordinarily do is to mark a range at the beginning of the year, and I would shift my bias long or short depending on whether price is trading above or below that range, right?
Yeah.
So I've just kind of marked that up on my chart, right? So early in the year, I would have had a short bias and then a long bias and then a short bias, and then I would have flipped to a long bias, right? But as we're coming up toward the end of the year, um, any move that price would have wanted to make away from that open, it would have it's done that by now, right? And so what I'm kind of left then considering is, look, how much further is it that price wants to move, right? Like when you have a fresh open, when you have a beginning of a new year, the significant low of the year has not formed yet, right? So it's like the year opened here, the significant low hasn't formed yet, right? So you
Yeah.
can kind of imagine, hey, price needs to go and form a significant low, right? And a significant high hasn't formed yet. And so you can kind of imagine that at some point, price would want to go and create a significant high, right? But then as that cycle progresses and you're reaching toward the end of that cycle, it's anyone's guess whether this closes as a doji, whether it closes at a fresh low, or whether it closes as a fresh high. And one thing which I always kind of advise traders to do is you always have to kind of think of things in probabilities and think of things in terms of the most common expected outcome, right? And to say, well, what is the possibility, right, that we flip the yearly open to the upside and then run for a new high, right? Based on the fact that we're currently trading below it
Yeah.
versus that if we're trading below the yearly open, we're generally going to expect to have a red candle close, right?
Yeah.
And so, if I was forced kind of gun to head, hey, at what point would you consider buying Bitcoin? I would say, well, I would really wouldn't consider buying the dip. I would look for a momentum move when it's trading back above 100K.
Yeah.
Whereas gun to head, if I was forced to do anything right now, I would sell it. And it's not about, hey, let's check back on what Will just said, in 3 months and say, look, it didn't kind of go low or whatever, right? It's just about the balance of probabilities, right? If a rocket is facing down, the best thing you can do is to expect that it will move lower. And if a rocket is facing up, the best thing that you can do is to expect on balance of probabilities that it's going to move higher. Below the open, you ought to be selling, and above the open, you ought to be buying. That would be the right thing to be doing on balance of probabilities alone, right? And
Yeah.
so it's a kind of very generic take, right? But these are the kind of building blocks that I have when I'm kind of creating an analysis. Say, well, we're trading below the yearly open. What would be the right thing to be doing right now? Right? And I don't think the right thing is necessarily to be buying from a long-term perspective, right? Whereas if the price starts trading above the yearly open, then at that point things can get a lot more exciting, right? And then you can say, hey, actually the sentiment has shifted back to the upside. And I'm talking here strictly from a kind of trade perspective, right? If you're a long-term investor there and you believe that long-term price is going to be a lot higher than this, then generally speaking, you wouldn't care at what price you're buying, right? You just set a daily buy or you'd set a weekly buy and invest a fixed sum every day or a fixed sum every week, right? And just kind of build your backs, right? But from a trading perspective, short, intermediate, medium term kind of perspective, the starting point is always, how do you determine bias, right? And I determine bias in if I was taking the kind of most crude form of it, I would say, let me take my bias from the yearly open, right? I want to expand on this concept a little bit more if I can, right? We're okay to do
Sure.
that.
Yeah. Yeah. Go for it. Yeah. Absolutely.
So, um, all right, let me throw up the monthly open, right? So, and I know people are asking about this in the questions they were posting on Twitter, right? But I've marked here the monthly open range, right? That's what people ask. What does more stand for? We've seen it on your charts, right? It's just the monthly open range. So a month begins on the first of the month, and if you take just the first 2 or 3 bars of the monthly open, right? You can define a range, right? And say, well, this is my monthly open range. And I have specific times that I take. It's maybe a discussion for another time. That would just be like alpha leak, man, if I gave that, right? I'm
No.
not
No. I
doing it.
get it.
I'm not getting carried
I.
away, man.
I'm just gonna put in, but I'm gonna cover it on a future stream.
Yeah,
But
right. So
but my God, is the monthly open powerful? And if if people are fairly clued up and they can decipher what you're about to spill here, it's a really fucking powerful strategy.
Well, dude, I'll tell you something, right? Look, if you define a range at the beginning of the month, right, and your strategy is to buy on a close above the range and sell on a close below the range, and to have just 3 or 4 attempts in any given month, I guarantee you backtest this. In the last 3 years, you will have only had maybe 2 or 3 losing months, right? You can just go and back test it. It's
That
fine, right?
that's
But
that's
it's
massive alpha there.
right.
It
Okay.
is.
So look, I've marked the monthly open range, right? And a lot of the key to this is actually how you define that range, right? Okay, there is a little bit of kind of edge in there, right? But you take the beginning of the month, you define an open range, and you say, well, let me be long above it, and let me be short below it, right? And then whatever direction that the price wants to move in, you just kind of move in that direction, right? And But like the point that I want to kind of make is this, right? That again, like if you kind of think, look, what is the opportunity? Well, the opportunity is to catch a move from the open to a significant high or to a significant low, right? That's actually what the opportunity is. When does that opportunity occur, right? Does it occur at the beginning of the cycle, in the middle of the cycle, or the end of the cycle? Right? And you just look at the chart and it doesn't take long to answer that question, right? It's like the opportunity is at the beginning of the cycle, right? It's when the open forms, right? That's when you have this chance to kind of get on board in order to create the wave that's going to move to the significant high or create the wave that's going to move to the significant low, right? So that's going to happen at the beginning of the cycle. As we approach the tail end of this cycle, right? We're good 3, 4 weeks into the month now. And someone is saying to me, hey, what are your thoughts on Bitcoin? My answer is nothing. I think nothing about it right now, right? Because whatever that opportunity was, it was at the beginning of the cycle and it's gone, right? What am I supposed to be doing at this point, right? The best thing I could be doing is sitting on my hands, waiting for the beginning of the next cycle, the next open, and then I'll go again, right? And I will be literally a feather in the wind. If the price is above the open, the sentiment is bullish. If the price is below the open, the sentiment is bearish, right? And that's the direction I'm going to be looking to kind of trade in, right? I'm gonna add just like one more kind of dimension to this because I want to come back to something I was saying earlier about probabilities, right? And just kind of thinking about outcomes from a probabilistic point of view. I've marked the monthly open range here, and I'm going to kind of scroll back a little bit. And here's a question, right? Um, how often does it happen that as we approach the end of the cycle, so as we're approaching the end of the month, that the price revisits the monthly open and flips it, right? What is the frequency of that occurrence? And the answer is going to be it's rare. That is not a frequent occurrence, right? Where as you head into the last days of the month, the price is going to go and flip the monthly open. Usually, the last flip of the monthly open, the first week of the month, you can expect it to flip. The second week, you can expect it to flip. The third week, you can expect it to flip. But as you start headed into the final days of the month, right? The last 3, 4, 5 days of the month, when did price flip on the last 3, 4 days of the month, the monthly open, right? And you look back and you realize it's kind of rare, right? Now, I'm going to make a trade plan, and and I'm thinking, hey, look, I could be buying Bitcoin, right? Well, what am I thinking, right? Like, is the price going to rush to the monthly open and flip it, right? It's just like the plan that I'm making is out of sync with how price behaves, right? Price does not behave like that. And or it does not behave like that the majority of the time, right? And so if I'm going to make a trade plan, I have to make a plan based on my understanding of how price behaves and where we are in the cycle, right? And once you've understood that way, once you've understood where are we in the cycle, how does price tend to behave at this phase of the cycle, then you will know exactly what expectation to have, what to be looking for, and what to be planning for, right? And that's why I'm giving the biggest cop out to the question that you asked, which is, hey, what do you think about Bitcoin? Bro, I've got my get out of jail card, right? You're asking on the 26th of November. Come
Yeah.
back, ask me on the 2nd of December, right?
No,
I'll
agreed.
tell
Yeah.
you
Yeah.
exactly. I'll tell you exactly what I'm thinking. Do you kind of see what I mean, right?
I,
And
I, I
so
do. Yeah. Yeah.
and so there's a lot of kind of ideas to marry here, right? That kind of on that on the wide time frame, and this is what I refer to as flow trading, right? Which is, you've kind of got your open, and you've just got this directional bias based on whichever side of the open the price is trading, and If you're trading above an open, the probability is price moves higher, and or and it would be the right thing to be doing to be buying, even if you got stopped out. And if the price is trading below the open, the probability is that it moves lower, and it would be the right thing to be selling. Even if you got stopped out of the trade, you would have done the right thing. Whereas if I sold above the open and the price went higher, I'm an idiot.
Yeah. Yeah.
And if I bought below the open and the price went lower, I'm an idiot. I cannot forgive myself for that, right? But if I bought above the open and the price dropped, I can forgive myself tomorrow,
Yeah.
right?
Yeah.
I'll just lick my wounds, and the next time I'll do it again, right? Because on balance of probabilities, whatever direction the rocket is facing in, that's the direction it flies in. But that opportunity, like I said, is at the beginning of the cycle, right? It's not at the end of the cycle. Now that the price has fallen this much this month, what's to do, right? The opportunity was here, right? The opportunity is not here, right?
Yeah.
And as well, you kind of hear a lot of. I think we use a lot of common vocabulary, right? So it's like you, myself, SE as well. We kind of talk about expansion and contraction models, right?
Right. Yeah.
And all this is talking about is this is a monthly candle forming, and what you're looking at is the expansion of the body of the candle toward the downside, right?
Yeah.
And so the strategy is to catch the expansion, right? That's what you're trying to do. This is the goal. This is the objective, right? Is to be a part of the expansion. And once that candle has expanded, the opportunity has gone. I don't trade contractions, right? That's not my game. What happens is that when you're trading expansions, you tend to get the biggest move. You get the move from the open to the significant high or the significant low.
You do. Yeah.
When you're trading contractions, what happens is that uh, I'll just draw it on here, man, and it'll kind of make sense, right? Like if you look at a closed candle, right? This is a closed candle, right? Okay. If we say, look, what was the most significant move, right? The most significant move was from the open to the low, right? The least significant move was from the low to wherever the candle closed, right?
Agreed.
Now,
Yeah.
it's going to be a lot easier to catch a small part of this move than it is to catch the whole of this, because that's what you're going to need to be able to do to cash out on a contraction, right? And it doesn't matter how good you are, right? You're going to get caught trying to do that. And the only reason I'm good and the only reason I don't caught is because I'm just always doing this. I'm trying to catch that small bit of what I know is a much bigger move, and it's really easy to do, right? Whereas if I was out there every day trying to catch a big part of a small move, that I wouldn't be sitting here today, right? That would be a bust account after a bust account after a bust account, right? So,
Yeah.
you just kind of, I think we were talking a little bit before you went live, isn't it? Right. And it was that kind of thing of you have to study the market and you have to understand the market, right? And once you've built up an understanding of how the market works, then you're able to say, well, let me devise a strategy that will enable me to capture some part of the move, right? But if you haven't understood the mechanics of how the market works and you haven't built a model of how the market functions, a model that explains how the market functions, then it doesn't matter what strategy you come up with. It's
Agreed.
actually going to be acting against the market, right? And whereas in order to make money and to be profitable, you need to be actually in sync with what the market is doing.
Totally. I just want to add to this. I don't know if people know this, but I created, before Spaceman dropped his indicator, the daily open, Monday open, daily open, weekly open, monthly open, one of the first indicators that I ever dropped on TradingView, which became quite popular at the time, was the open, the TraderX open levels, and that was actually inspired.
I've used it.
Yeah, well, that was inspired by
You know
you
what? I
because
used to have it on MetaTrader, right? The
yeah,
same.
yeah, that
Yeah, I used to have an indicator for MetaTrader,
yeah,
and then when I started using TradingView, I think your indicator was the first one
yeah,
it was the first one that I downloaded, right? And it was like, yeah, I can use this, man. It's got all the
yeah.
levels on.
No, but I appreciate that honestly. But that for me was inspirational, and it's like you said, honestly. A lot of people ask me like, "Hey, so I work full time. I don't really have time to day trade. What do you recommend?" Honestly speaking, when I went back to high time frame trading in 2019, in 2020, in 21, in 2022, the very first thing I did, right, was look at monthly opens. And my God, if you go back to crude oil with the monthly opens, I think it was in 2020 and 2021 when crude oil was going up, it was going up, it was going up. What would happen is that price would open around the monthly open. You'd get a deviation below it. Very, very short lived. The minute it flipped, it absolutely fucking took off. And one of the guys in the audience, Khalil, is asking, Exo, does the same principle apply to altcoins? If you watch my streams in 2022 when I was shorting all the altcoins, what was the one strategy that I kept talking about? Every month, I said, wait for the monthly open to happen, let price trade above it. The minute it gets below it, business time. Follow the trend down. And I'm really glad that you've covered this because it kind of takes me back to one of the first core strategies that I actually used to trade. It wasn't just about the monthly open itself for me. It was about the context of where price actually is. However, the overall environment context is that if I'm seeing failure of the monthly open and we're in the first week of the monthly open, I want to flow in that direction. Why do I want to counter trade that unless it's a reversion back to the mean? But I think I'm actually really pleased that you covered this because I think what I want to say is like if those of you who are still trying to figure out your game in trading but you can't trade full time, take this, back test it, forward test it, evolve it. And I've actually picked up something new on today's stream is that towards the end of the cycle, how often does price retest the level? I wasn't aware of that. And that's really a phenomenal insight to think about when it comes to probabilities, statistics, and numbers. And I'm glad you covered that, Will, because I honestly did not know that last part.
Yeah, like I mean, there's a lot. I mean, like the more you kind of study cycles, I think it's one of those things where you can't study it enough, right? And I don't know, I consider myself a lifelong learner too, right? It's
Yeah.
like like you have to have. Oh, I'm going to end up going down another.
Rabbit hole.
We're gonna go down another cul-de-sac now, right?
Yeah.
But here's the thing, right? Okay. Uh,
Just do it, man.
let's talk a little bit.
Let's do it. Let's do it. Come on, let's
Yeah.
do it.
Okay.
Yeah, go for it.
So I want to annoy a lot of people. Uh, okay. So we're discretionary traders, right? And I think a lot of people kind of misunderstand sometimes what it means to be discretionary, right? Because discretionary just means that we pick and choose our trades, right? And it means you're getting a signal and you can choose to overlook it. You can just say, hey, this one doesn't feel right. I'm going to skip it, right? Yeah, that's discretion versus, for example, systematic traders, right? Where they have back tested a system and they've collected data and then they start applying it forward in time. But if you're going to replicate the statistical returns, you've got to take every single signal that's being generated, right? So it's just that kind of understanding what does it mean to be discretionary, right? Discretionary means that you pick and choose the trades. Um, Discretionary does not mean that you be discretionary in your charting. It does not mean that you be discretionary in your analysis. It does not mean that you be discretionary in the way that you read the chart, right? The way that you read the chart has to be systematic. The way you analyze a chart has to be systematic. If it wasn't, then what happens is that you will never know what it is that you're doing right and what it is that you're doing wrong because you just don't have a data set. right? If every single time you did an analysis, it was being done for different reasons, right? Then, and you took 10 different trades for 10 different reasons. How do you figure out what was working and why, right? And so it's that kind of Bruce Lee quote, right? It's like the guy who does one kick 1,000 times versus the guy who does a thousand different kicks once, right? You have to repeat the way that you do analysis. You have to repeat the way that you do charting, and you have to be consistent in that. And the thing is that when it comes to marking, for example, levels on a chart, the only thing which is going to give you any degree of consistency is when you're marking a weekly open,
Agreed. Yeah.
or when you're marking a monthly open, or a quarterly, or a yearly. Why? Because these things are being marked in the same place every week, every quarter, every month, every year, right? And then when you observe price action, you can kind of make very clear observations about how price rotates around your levels, right? Whereas if you've just marked some random box on some clustered structure somewhere on a chart, and then you're trying to observe if there's a pattern of behavior of how price rotates around that level, there's so much cognitive bias. When you're looking at a chart, you're never going to mark the exact same structure ever again, but you might believe that you're doing it. And so, kind of, gathering that data, being consistent in the way that you mark levels on a chart is absolutely vital, right? If you're not doing it, you don't have a data set, right? And it just kind of feeds into that thing that we're kind of looking at with, the monthly open ranges and yearly ranges and everything else that goes with that.
I think that's a great point, because the word that I use is there's too much variance. You don't know what you're trading. And I think this is where people get confused. You saw how a few weeks ago, some of ICT's finest traders were drawing weekly order blocks that didn't even stand a chance of reacting. Why did price slide through it? Because it's not meaningful, is it, really, at the end of the day? It's more based upon, here's the level, I think it could bounce, but hey, it shit through it. Well, what does that mean? That your analysis was wrong? Or maybe the fact that you don't have enough systemization in your trading to... Because look, at the end of the day, what you said is basically, can you quantify your results? Can you quantify your performance? Can you measure it? And if you can't measure it, then is it truly systematic to an extent? Because then what are you actually trading? And that's every facet and every aspect of trading. Your stop loss placement, is that random? Is it below a varying low every time, or varying high, or is it actually structured? Is it ATR based? Is it a certain distance from your entry for whatever reason? How do you systemize that? So these are the things that really you have to think about when it comes to trading and truly trying to develop an edge and having some level of systemization. And I think you've hit the nail on the head, that there's a real misrepresentation and misunderstanding of what the word discretionary means. And I think what you've just summed up is that it's discretionary doesn't mean like you just randomly draw a supply demand zone, okay? Discretionary is the way that you actually trade, and is there a level of consistency in the way that you trade so that you can actually start working on one strategy and refining it. But at least you know the very thing that you're refining, as opposed to randomization, where you say, I want to improve on my trading, so I'm going to look at order flow, I'm going to look at this, I'm going to look at that. But then what are you actually refining? Your tool set or the way that you actually systematically trade? It's a great point.
Yeah, it's been a common challenge, right? It's been a common challenge. You can almost, I'm pretty sure a lot of people have mentioned it, right? Which is that it's like I could give you a chart today and say, hey, can you mark your 5 SR levels on that chart? And I can give you the exact same chart half an hour later, and you'd probably mark 5 different levels. And this is the thing, isn't it? It's like a lot of what that comes down to is just kind of cognitive biases at the time at which you're looking at the chart. And if the way that you're observing price action is not systematic, if it's not consistent, then your results never can be, right? Just because whatever observation you're making is random. And whereas when you start marking things like monthly opens and weekly opens, these are consistent marked on a chart. They're done in a fixed way. If I give you the same chart in a year's time and I said, hey, can you mark the monthly open range? You'd go and mark it at the exact same spot,
Yeah,
right?
absolutely.
And
Yep.
you'd make the exact same interpretation in a year's time that you would have been making today, right? Because the way that you observe chart, the reference points that you mark on a chart have become consistent, right? Whereas if you're kind of marking random candles, I think that well, there's a reason why people kind of follow that approach tend to fail a lot, right? And it is just this: it's that they will never have a consistent data set, right? Because every trade was actually, in fact, random. It was random analysis,
Yeah.
even if they thought they were marking the same level they were, because you're always going to have those biases, right? And so, like if people are kind of new to flow trading, this is the starting point, right? The
It is.
starting point is to look at your weekly opens, to look at your monthly opens, and to use these as your kind of guiding reference points. I always describe it a little bit like trying to read a map. You want to read a chart, you want to read a map. If you were trying to guide someone into, you have a friend coming over to visit and he's a little bit lost and he calls and he says, "Hey man, I'm lost." You're going to say, "Hey, good, I didn't want to see you anyway." But you might say,
Yeah.
you,
Yeah.
you might say, "Okay, look, where are you?" Right? So I don't know, I'm lost. Okay, what do you see? Right? And he says, "Well, there's a Mackey's, right? And there's a church." So, okay, where's the Mackey's, on your left or the right? Is it the Mackey's is on the left? Where's the church? In front of it or behind it? It's in front, right? Okay, carry on. It's like these are the reference points, right? But your reference points need to be fixed. And if they're not fixed, you're going to end up actually just not learning anything about price action. You're not going to learn about what the patterns of behavior are, because you can't learn a pattern if you don't have a reference point in order to see how does the price rotate around that reference point. That is effectively what a pattern is, right? It's just
Yeah.
you have a reference point on a chart and then you observe how does the price rotate around that reference point. Well, if your reference point is not fixed, then you're never going to learn what the pattern of behavior is. And
Yeah.
here, what we've got is a fixed reference point. And then over time, as you observe, how does price rotate around this level? You start developing expectations for the future about how price might behave. And they become entirely consistent and in line with what has gone before, right? Whereas if you're marking some random block or some random cluster anywhere on a chart because that stood out to you at the time, the next time when you're marking that on another chart, it's going to be something completely different, right? We're on Bitcoin here. I can kind of maybe flip to something else, right? And just kind of give a look, right? If we jump on Solana or something, it's the exact same approach. I don't know if you guys can see it, right? But it's like it's almost like a cheat code sometimes, right? You trading is only ever going to be as difficult as you try to make it.
Yeah.
And I mean, these things are so straightforward. We've been working a lot on automation over the course of the last year, right? I mean, yeah, you can, you can almost, you can't entirely automate everything, right? But there's a lot of these levels where you just build an indicator and it kind of marks your exact level for you, and you observe the exact same price behavior on Solana that you've been observing on Bitcoin, and you jump to hype, and you're going to be observing the exact same price behavior that you're observing on Solana, but now you're looking at it on hype, right? I mean, is it any different? And that's the difference between using consistent reference points or fixed reference points versus uh, that kind of discretionary charting, right? So
Yeah.
when we say we're discretionary traders, it means we pick and choose our trades. It doesn't mean we pick and choose the analysis. The analysis is still done in the same way every single time.
Yeah. I just want to really honestly, I think I was very, 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 very fortunate to pick up on this in 2019 when I went down this journey of systemizing my trading. And I think the reason for that, Will, in all honesty, is because SC, he's always spoken highly of you. He's always said that you were one of his early mentors. Is that ST incorporated this into his trading, whereas mapping out his map using monthly opens, weekly opens, Monday's range, and even Tyler's another one who I believe has studied under you, and again an advocate of Monday's range. And people are asking in the audience, well, does this work on the weekly open, on the daily open, on it will do if you can systemize it. And it's just the same with the IB range. If you've got a initial balance range, which is the first hour of electronic trading hours or the first hour of the cash session, and you observe the width or the degree of that initial balance, and then trade either the fake out, reclaim of the other side to see expansion from that contraction that Will has talked about. So you can apply it to different time frames. But the one thing I will say is that where I've had more success in really seeing a shift in my own trading, and this is really something for you guys to think about, and girls, is that to incorporate this as, this isn't some sort of winning formula strategy, but it forms a foundation in a way to think about the markets contextually. Environmental context is absolutely key. And this really helps set that tone for, if it's a monthly, then you've got your monthly context. If it's a weekly open, you've kind of got your weekly range to work with. You're waiting for the high and the lows to develop. And if it's a trend in market, well, if it's breaking below Monday's range and it's below the weekly open and it's below the monthly open, then why are you trying to counter trade the trend, what is clearly developing into a trend? And it's these, I don't like to call them rules, I like to call them filters, because it's keeping you out of the shit trades and helping you flow in the direction of the market, unless it's truly range bound. Okay, so I think that for me was one of the key foundational concepts that, again, I was very fortunate to pick up, because I think had I not picked that up very early, and had I not released that indicator that I released, which is kind of the reasoning why I released that indicator in 2019, it set the foundation for my own way of trading price action. And I think it's been an absolute masterclass with what you've shared, because as we're heading into the end of the year, I'm revising some of my strategies, and it's just beautiful to see how important the emphasis of this actually is from an environmental contextual perspective, in order to get the flow and the context right moving forward.
Sure. I've just thrown the weekly up on the on the chart. I think this is something people were asking. Does it work on the weekly? Dude, this thing works on an hourly. It works on an hourly time frame, right? It's like if you mark the hourly open and drop down to a 5-minute time frame, you can catch the direction of that hour, right? It's just a very simple principle, right? Which is, here's an open and we expect price to make a significant high or a significant low, right? And but at the same time, I'm not advocating, hey, go away and do this on a 5-minute time frame and an hourly open, right? The range has to be significant enough where there is the potential to catch a bankable move, and an hourly flow trade isn't necessarily going to give you that. You could potentially do that on an intraday basis if you're trading off of a daily open. Bitcoin does tend to have a significant daily price movement. You could do that definitely on a weekly. I've got the weekly up on the weekly template up on my chart at the moment, and as well you can do that on the monthly. All you have to do is define that range, and once you've defined that range, you're looking to try to capture the move away from it. And you just have to be a feather in the wind. You kind of have to accept that if the price flips the range, you're wrong, get out, right? Change your mind, go the other way, right? And you're not in control, the market's in control. Let the market do its thing.
Yeah.
And you have to kind of move away from that idea that you're trying to catch some kind of killer trade, right? What you're trying to catch is a winner trade, not a killer trade. Or certainly, the rule is that learn to catch the winner trades first, then learn to catch the killer trades. And so, when you're trading flow, you have to be kind of open to whatever the market wants to give, and you've got to still be able to read price action and to know when to bank, which is a whole different kind of dimension in this type of system, right? This type of system actually is very good at telling you where to get in. It still does require a read and some and I think the latest kind of cool term to use on FinTwit is skills issue, right?
Yeah.
Right, but there's some skills issue, right, which are required when it comes to banking
Yeah.
and actually still profit from it. It's a whole different kind of subject that maybe we've got to look at some
It
point.
is. It is. I'm going to drop a bit of alpha here for anybody who's paying attention. And it's a very simple strategy that you can incorporate into your trading. So what Will has done here is mapped out the weekly open. Will, you probably can't see my mouse, but I'm going to spend 1 minute just talking about this strategy. Two things I want you to think about is if you know that the high time frame weekly moving average and daily moving averages are trending down, if you go and backtest this, you'll see how clean it is. But if you look at the weekly open, you often get the high of the week, the deviation above the weekly, and the minute we get under, look at the extension, okay? Then the next week opens, trades below it, gets back above the level, breaks through it, and sells off again. This is when you apply this with a moving average on the daily or the 4 hour, and you're using the bands as mean reversion, you're waiting for the confirmation or you're waiting for price to get back below the level, knowing that the high time frame moving averages are trending down, flow in that direction. But what the weekly opens give you is a way to think about getting on board with the trade where if you got the high of the week, you've got a logical way to define your stop. It's not arbitrary because it's some random high. You're actually using the high of the week, you're using your trigger point, and this is where your discretionary comes in. Is the risk worth the reward to some lower target, wherever some other target that you're looking for? Once again, price opens at the weekly, trades above. The minute we get back below, okay, you get a slight deviation of the low of the week, comes back, it's still being capped by the high of the week, and then you get the expansion lower down. Okay, so early week range bound price action, expansion later in the week. That is characteristic of a downtrend, and you will see exactly the same during an uptrend. So next time you see Bitcoin going on a rally and prices above the moving averages, but you can't find a way to get on board, well, this is one way that you can certainly get on board, whether it's the Monday's range, whether it's the weekly range, whether it's the monthly open strategy. It's something to think about, something that you can add to your game in terms of thinking about price and how to get on board with a trade. Back to you, Will.
Okay. No, back to you, bro. You're doing okay there.
No, I think what would be very key now is I would like to talk about equities because when I think about the future of trading, when I look back at some of the market wizards over the years, and when you look at the modern day heroes of trading, you've got Lance Brightstein, you've got Kulamagi, you've got the Short Bear, who are featuring in the next market wizards. And then you got some of the legends like Mark Minervini, William O'Neill, Pradeep Bond, all these guys are phenomenal stock traders. And it's the one thing that you said at the start of the stream is most people don't really understand the volatility regime. Most people don't realize that if you want to create a good trading system, it's not about finding a system that suits your style. You have to adapt to a system that you can make work for yourself. And I think what the big disappointing factor for me has been is the lack of opportunity in trading altcoins on the higher timeframes. Now, if you look at equities, I think it's been very well documented that equities have been performing quite well. There's an abundance of opportunities, and the core for trading equities for me is that you're looking to trade volatility, you're looking to trade trends, you are looking to trade momentum bursts. Okay, bullish price action, event-driven, news-driven, that's going to give you continuation to the upside. They're the momentum trades that you really want to latch onto, which we're not seeing in the crypto space. And so to begin with, you need a good set of scanners, a good set of filters that are going to bring the trades to you. You are not looking at equities, scanning thousands of pairs and trying to find 1,000 charts. You're looking for trades to come to you. That's where a good screener or a good scanner helps you to define those rules, okay? I'm not going to go into too much details about those rules. I'll cover that in the mentorship. But when you think about what's developing in terms of crypto exchanges, in terms of perps, in terms of dexes, Are we not seeing access to trade some of these instruments, whether it's an underlying index, whether it's a CFD, whatever it is? But there is one way or another to gain exposure to trading Apple, to trading Google, to trading Amazon. It may not be direct market access, which means that you're actually trading those shares on a platform like Interactive Broker, but you can still trade those on something like Prime XBT, where you've got access to equities. Or maybe you start seeing these assets being able to trade on the hyperliquids. Okay, and I do feel that is where there is a transition, especially for people like myself. It's like, all right, I actually want to be a part of equities, because from all the traders that I chat to who've been around for the last 15 years, who've traded FX like yourself, for whatever reason, I just see that you're all transitioning towards equities, and you've absolutely been killing it in terms of equities. You know, from our charts and our personal private charts, I can see you've absolutely been crushing it. Tell us more about that transition to equities. And I know that part of the stream is really about you kind of going over the foundations of your entire process, from scanning, searching, narratives through to trade execution. It might take 25, 30, 40 minutes, but I think there's going to be a lot of alpha in this, because I'm looking forward to it, because this is something that I generally want to do come January 2026. So all yours, Will. Take it away.
Okay, so I'm gonna try and I have a habit when I grab the mic, I just kind of talk and talk and talk, and then days and weeks go by. Right? I have a habit of kind of hogging the mic, so I'm gonna try and try and keep each point short and sweet, and uh, just to kind of get the main issues across. So. I think it's following on from a lot of discussions we already had earlier during this stream, right? Which is that um, I've always kind of been ideologically money, and I think it's just an undeniable fact. Anyone who knows me from young, yeah, they know I've always been kind of ideologically money, and um, I think that. Uh, I'm always scanning markets, right? And um, I'm just kind of thinking how to go into this in a kind of good way that will kind of convey the concept, right? But um, I tweeted something a couple of weeks ago, a little while back, right, where I was kind of saying that, look, you have a system and you have a market environment, and what happens is quite often when people are learning to trade, they're kind of learning systems, right? But what you have to realize is that there's no system that actually works, right? What works is a system in a particular market environment. And so if you're just trading a system, what's going to happen over the long run is you're going to have a bunch of winning trades and you're going to have a bunch of losing trades, and you're not actually moving forward. You're not actually going anywhere. Whereas if you learn to recognize the market environment in which a system gives the good signals, what will happen is that you're applying your system and you're getting signals, but you read the market environment and you say, hey, you know what? I'll take this signal because this is the environment in which my system gives good outcomes. And then you'll get a signal and you look at the market environment, and you'll say, hey, you know what? I'm going to skip that signal because in this market environment, the signals usually fail. And if you're applying this process kind of hand in hand, studying the market environment and studying the signals that your system is giving, you can take a system that's 50-50 and have a 100% win rate, right? I'm kind of exaggerating a little bit here, but I think you kind of get the idea, right? That the success of a system is not in the system itself. It's in learning to recognize the market environment in which a system is going to give good signals. And this is why people learn systems and fail, right? Even though it's a perfectly good system, you can go and learn the exact systems used by the world's largest investment banks, prop firms, investment funds, family offices, and the whole shebang behind the industry, right? And you're still going to fuck it up because what you haven't learned is when to apply the system. You haven't learned the context and the environment in which that system is supposed to be applied, right? So I'm very much I have very much a kind of multi-strategy approach. We've talked a little bit about flow, and I'm kind of quite well known for tasers and trend lines and back tests of inverted walls and shoulder walls and things like this. A lot of kind of ideas which we've discussed. But one of my favorite strategies always has been buying something at a discount, right? And this is something that people were quite often doing with crypto and doing with alts, but more recently, the absence of an alt season hasn't really given very much of a compelling case to be sticking with that market, right? So, so I started scanning stocks and I started seeing a lot of instruments in the kind of market environment um, that I recognize, where I would kind of say, hey, this is actually cheap and it's the kind of market environment where I think my system will deliver a good trade. And so all of this is kind of still from an introductory perspective. What I want to do is maybe just walk you through the steps that I go through in order to select the stock and just the different kind of factors that I consider.
Yeah, go
Um,
for it. Go for it. Yeah.
but still in introduction, right? There's a second introduction to this, which I think is equally important, right? Which is that um, there's a lot of talk about framework and process, right? I think these terms they get and branded or brandished. Brandished, is that the word? Right? They kind of get thrown around a bit, right? Framework, process, you need a process, you need framework, and it's just kind of, it's kind of very circular the way that, and the way that people use these terms without ever actually giving any detail about what it might mean to have a process.
That's what pisses me off the
Now,
most. I
or to
feel
have
like,
some
yeah.
framework, right?
I,
You
th-
kind of see what I mean?
I,
So
wa-
it's like yeah,
I
go.
want to have my rant. I think that's what pisses me off the most is that people talk about you've got to have a process, you've got to have a system, you've got to do this. Well, fucking tell me what it is. What does that look
Tell
like?
me
No,
what it
no
fucking
fucking talks
is,
about it because they don't have it.
right?
They're just
Exactly.
regurgitating what everybody fucking else is saying. But if you
There you
honestly,
go.
if you ask any ICT trader, whatever it is, what's your process? What's your filter? Well, I can't tell you because that's my edge. Bullshit. There is no edge. It's just a process. The edge is in the way that you apply it, and everybody's going to be different and unique. That's the key. There is understanding when you're actually going to apply that system or process. But that's one of my biggest peeves is that you listen to a lot of these trading podcasts, process, but nobody fucking tells you what that looks like.
Yeah.
But carry on.
What do you mean? What are you actually talking about when you say process, right? And I think like so. What I want to do is I'm going to open that up, right? I just want to kind of I want to open it up and I want to actually explain it, right? And the best way to do that is just by kind of looking at the trades that I've been taking, right? So I'll share those trades with you. And um, every chart that I'm going to show you here is one that I posted on my X timeline, on my Twitter timeline, or in my Telegram group, right? So these are all trades that I've taken. Some of them I'm still riding, and and you can go and kind of check on my timeline when I posted it and stuff like this, right? So um, the 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 one that kind of really kicked it off, right, was Intel, right? So I think I need to be on a higher time frame for this now or something, right? It's just kind of just to make it fit on just to make it fit on the chart, right? Here we go. All right, so this is Intel, and um, when Intel was falling here into that kind of 20 price handle, I started calling long on Intel, right? And I even posted the prices and I started buying that dip and accumulating and kind of building a position. And then just before the breakout, I started tweeting, look, I'm buying now and we're not closing this until it reaches new all-time highs, right? So kind of giving it all the kind of bravo braggadocio, right? And so what I'm going to do is I'm going to take this one and maybe run through the entire process, and then I'll show you a couple of others. And like I said, all of these are from all of these I kind of live traded, right? And I posted all across my social medias and stuff like this, so you can kind of just go and check the timestamps, man, right? Okay, so here are my rules, right? And sorry, there's going to be a third introduction to this, right? Which I need to kind of really impress, right? Which is, I say this all the time. There's many roads that lead, there's many roads that lead to Rome, right? There's not one road that leads to Rome, and this is one way of doing it, right? It's like one particular style of trading. So, for example, XO I know likes momentum stocks, and he likes kind of chasing those highly fast trending Nvidia type stocks and whatever. And it's a completely different process if you want to develop a screener to be able to allow you to capture and track those stocks, right? Um, this is my process, and this specific approach is about buying something that's at a discount, buying something that's cheap, right? And so I just kind of want to put that in. It's a very specific process with a very specific within a very specific market context. Okay, so we kind of take Intel, right? And the first rule that I have for building my stock portfolio or for trading stocks is actually incredibly simple, right? Which is I just say, look, have you heard of it? Right? Someone comes along and says, "Hey, there's this ticker, ABC and IXP, and what you think about it?" And I just say, "Hey, man, I don't know." Right? And the reason is because genuinely I don't know. Right? If I'm trading a stock, I want to have heard of it. I want to know something about it. Right? And as far back as I can remember, every box I've ever bought had a sticker on it that said Intel inside. And I know what Intel is. They're a chip maker, right? And they make computer chips what go inside your computer box. And and so this is kind of my first rule, right? If I'm going to be investing in a company, I want to be buying a stock, I want to know what that business is. I want to have heard of it. I don't want this to be something which is completely random or something which is kind of completely new to me and I have no idea what that company is or what they do or something like this, right? This is the first part of my process. Um, Part two, right, or the second part of the process is that I want to know, is there some story or some narrative or some logic that's driving the price? Okay. And so, for example, with Intel, what happened is that the price fell, it had an all-time high a few years back, and then it rallied a couple of years ago and it kind of hit that high at 50, and then it just kind of fell. And all of a sudden, you're kind of, 75% off the all-time highs and kind of trading at these lows. And the question that I was asking is, what changed between when price was trading at 50 versus price trading at 20? What actually changed in that business? And the narrative with Intel was actually incredibly straightforward, which is that you had Nvidia, and Nvidia had invented these new chips, super powerful, very efficient processors that could kind of deal with all of this AI business. And Nvidia hadn't. Rather, Intel hadn't. And it doesn't have these powerful AI incorporated chips, right? But other than that, the business is exactly the same. It's like the business model is the same, the revenues are the same, everything they're doing is exactly the same, but the stock price has gone to half, right? And then I kind of had a question where I thought, look, this idea doesn't make any sense to me. It doesn't make sense to me that the stock would be worth 50, nothing changed in the business, and now it's 20, right? Um, Add a bit more to the narrative, right? there's this trade war going on between America and China, and chip makers have been kind of designated by the American administration as strategic strategic companies, right? Because they've got this product which is a kind of strategic project, and there's this chip wars which are going on, right? What are the chances that this company is going to fail, right? Like I said, the business is the same, the revenue is the same, and then there's this narrative, right? And then there's this environment in the chip making space. And the more I thought about it, the more I kind of started having this roaring kitty GameStop moment, right? Where I was going to start getting the chicken tenders out and, putting a bandana around my forehead, looking like Karate Kid or something, and start doing live streams or something on Reddit, right? That, look, man, what the hell's going on here? The market has got this very, very badly wrong. There is absolutely no reason why the stock should be trading as low as it is, right? So, so number one, have you heard of it? Number two, is there some kind of narrative driving that price action? Is there something that's explaining what the market is doing? And I want to know, has the market got it wrong? Is the market misunderstanding something, right? Um, I always kind of double check financials, right? And on TradingView, you can just kind of click the earnings figures and things like this, and you can check the financials. And I don't look at the earnings so much. I just tend to look at the revenue, and I look at the trajectory in the revenue, right? So I want to know, hey, is the revenue flat? Is the revenue growing? Is the revenue declining? Because if you've got kind of flat or growing revenue, right? Any company can make changes in productivity and efficiency, and they can increase their profit margins, and then they can start paying out higher earnings, right? So I was kind of looking at the revenue figures and trying to understand the kind of impact that's happening on revenue. There's that. Um, Still sticking with the second point, right? I mean, this thing about checking financials, it's still there within the kind of narrative and the story of the firm. And this one's a really important point, right? Which is this, that I always ask the question, has something fundamentally changed? Has something fundamentally changed in the market that means that this company is no longer viable, right? And that is a very, very important consideration. I can't actually stress how important that consideration is. Um, I'm going to go back to the 90s, right? So just kind of expressing how much of a boomer I really am. We're going to go back to the 90s. In the 1990s, here in the UK, uh, one of the most valuable companies in the UK was British Telecom, right? It's BT. And the reason it was the most valuable company was because they essentially had a monopoly on the fixed landline business, right? So any landline telephone, chances were that that's coming through BT. There are a handful of other players who had made an insignificant dent in the market, right? Consequently, BT was the highest trading, or one of the most valuable companies in the UK in terms of stock price. In the late 90s and then in the early noughties, that price, the price started falling and falling and falling and falling, and then it just kind of became just another company. And what actually happened in that time was the advent of mobile telecoms, right? So you had people come along like T-Mobile, Vodafone, Airtel, and other mobile telecoms companies, and today, one of the most valuable companies in the UK is Vodafone, right? Which is a mobile services provider. And so the story of the decline of British Telecom, right, was actually a fundamental shift in the marketplace, right? That's actually what happened, right? That was the cause of its demise at that time. And so if you're going to be investing in the stock, you want to know, right? This is not a mean reversion play, right? Mean reversion it will work until you misunderstood that something fundamentally has changed here, right? And we're going to kind of lean back on crypto and alts a little bit here. This is exactly what's happened in the alt market with the alts and crypto, right? Which is that um, there is no alt season, right? You might have some kind of individual ticker that kind of takes off, right? But last year, this year, and the tail end of last year, there was a fundamental shift, right, in crypto, and that was the advent of tokenization and the launch of memes, and consequently, you have no one in the social space advocating or pushing any altcoin at all, right? Because there's actually no motivation to do it. Why would you, why would you invent or rather invest a in a small uh, invest a small portion into some alt and push it when you could put that same capital into a meme and 10x it in within the space of a few weeks or a couple of months or what have you, right? And so, I think like one of the things everyone has to realize is how much crypto is actually dependent upon marketing, right? And it's kind of dependent on the calls. And once the calls lose interest in a particular token or in a particular product or in a particular alt, that's it, it's over, game over, right? Bitcoin may be too large to fail, right? It's just the most heavily marketed token, right? Which is why it's so popular. But those alts, man, they're finished, right? Show me anyone shilling any alt, right? With any kind of hubris, right? And I don't think you'll find it there anymore. There's a fundamental shift in the market, right? Which is what makes a run in the alts so difficult now, or an alt season where all of the alts would rally so difficult. Bitcoin went on and hit new all-time highs and new all-time highs and new all-time highs, and most alts could not even recover 30-40% of the 90% drop that they lost, right? So it's a fundamental shift in the marketplace. And when you realize that something like that's happened, you cannot rely on the mean reversion trade in order to lean into or glide into profit, right? And it's the exact same thing when you're picking stocks, right? You just have to be really, really careful. And that's why you need to kind of have this consideration, right? That is there a fundamental shift in the market? If there is, stay away, right? Otherwise, you're good to go, right? So that's another consideration. Okay. Um, a third consideration that I have is social cues, right? So I want to know that people are talking about a particular stock, right? And it doesn't matter to me whether they're liking it or whether they're hating it, right? But you want it to be something that is being talked about. It means there's eyes on there. People are watching it. People are talking about it, right? Even if it's just ripping the mick out of it, right? It's like, ha ha, look, check out what happened to DoorDash. It just dropped 20% in an hour. Freaking hell. It's like, and people actually talking about it, and that just kind of tells you, hey, there's eyes on that stock because and you pick that up from the fact that people are talking about it. So that's something that I want to know. I don't want to be getting into something where only I'm watching it and nobody else is watching it. And following threads on Twitter X is kind of really good for that. And there's a whole bunch of bots and stuff that run on X that you can follow that tell you the most talked about stocks today, the most talked about crypto tokens today, the most posted about XYZ today. And fair enough, some of those figures have got to be massaged, right? But still, it can be quite a decent indication. And then as well, if you go search the ticker symbol, you can actually see how many people are actually chatting about something, right? And so that in itself is like something worth looking at, right? So social cues is important. Um, okay, the fourth element that uh, you need to consider is this: that um, what are the big boys doing, right? So it's like you're trading with you're trading with 1K. The guys who are trading with 10, what are they doing? And the guy who's trading with 10K, he's got to say, well, someone who's trading with 100, what's he doing? And the guy who's trading 100 says, well, the guy who's trading a milli, what's he doing? And the guy who's trading a milli says, well, the guy who's trading 100, what's he doing? Right? You want to kind of try to get some sense of who are the players in this business and what are the big boys doing, right? So you might sometimes have some information about what it is that there's a fund and it's a player in this stock, or it's building a position, or it's taking daily buys, or it's doing XYZ, right? So that's something you want to keep an eye on. Okay. Um, the fifth question that I have is, how heavily discounted is the stock, right? And generally speaking, I'm going to say generally speaking, um, I I tend to get interested when something is 70, 75, 80, 85, 90, 95% down, right? I get interested because that is headed into the territory of what might be considered cheap, but within the context of what you understood about the narrative and the story and the logic behind what was driving price. And so, for example, when I was looking at when I was looking at Intel, if we take if we drag that from the all-time high down to there, we're at a 70% discount from the all-time high, right? And in that time, nothing has changed. Revenues have actually grown, right? So with it being at a 70% discount and the narrative being what it is, it starts making sense to say, hey, you know what? Maybe I ought to be taking a look at this. Maybe there's a buying opportunity here, right? So I want to look at the level of discount. And like I said, generally speaking, 60, 65, 70, 75, 80, 85, 90, 95. The deeper the discount is, the more interested I become, right? And so that's something to consider, right? Because this is effectively for me a pullback trade, and here what we're looking at is a really deep pullback. Yeah. Okay. Um, the next point that I want you to consider is price action, right? And the price action that I want you to look for is uh, it's always hard to kind of convey price action, right? But the price action I want you to look for is the price action that you're seeing here, right? And I'm going to try and describe it to you, but you see the hard drop, right? And then the price consolidates and pulls back. And then you see the hard drop into your deep discount level, right? And it's that price action. This is a completion pattern, right? And it repeats again and again and again. And when you get that price action, this completion pattern headed into a deep discount territory, you are going to get a bounce off of it. You are going to get a reversal off of it. And so that price action is key, right? It's that price action. Okay. I'm going to come to execution and allocation in a moment. Those are the two final steps of the process, but I just want to kind of quickly summarize what I've said already. Number one, have you heard of it? 2A, is there some story, narrative, logic that's driving price? 2B, has there been some fundamental shift in the market that means this stock won't recover, right? 2C, just double check the financials, make sure that the revenues are on track and there isn't some kind of fraud taking place, right? You don't want to be buying a dip in Enron. Okay. Number three, are there social cues? Are people talking about it? Are they liking it? Are they hating it? Is it in the spotlight? Number four, what are the big boys doing? Right? Are there some funds that are involved in this? Number five, how deeply discounted is it? Right? The deeper the discount, the more interested you have to be. And number six, we're looking for a very specific price action, a very specific completion pattern as the price falls into our discount zone, right? So those are all the factors that came together, right? That had me buying buying Intel at those lows, right? And what have you. Okay. So this is Intel. This is probably one of the biggest stock trades that I've taken this year, and it's kind of generated best one of the best returns for me actually this year. Has been quite an incredible play. Um, I want to actually go back and show you Netflix, right? And um, I this trade is going back a few years, right? We're kind of going back to 2022. Just a word of note, which is that recently there was a stock split on Netflix, so they went by 10, which means the price that you're looking at now is is 10 times less than what it would have been before the stock split, right? So before the stock split, that would have been 1,060, right? But they did a stock split just a little while back. That's why it's the price that you're looking at, right? Okay. I'm just gonna what's going on here? Control. Okay, get the scroll working. Just gonna go back a little bit, right? Um, the Netflix was one of the best kind of stocks. It really kind of ran with COVID, right? And it was quite a straightforward narrative, right? Which is that COVID kind of kicks off somewhere around here, and then everyone says, well, people are sitting at home. What are they going to do with themselves? They're going to be watching telly. And so for the next 2 years, everyone watches TV and could not watch enough TV during COVID. And then the whole COVID thing kind of starts wrapping up, and everyone says, well, man, Netflix, it's all over, right? And price just takes a massive tumble. How much of a tumble did it take exactly? I'll show you, right? It dropped 75%, right? And there was a chap on Twitter asking me, hey, what price are you buying Netflix at? And I was replying to him, buy at 175, which is around here, which would have been probably almost exactly the 75% price handle, right? There's your freaking alpha, right? Okay. I mean, it was quite an easy pick, right? But what I want to show you and what I want you to kind of understand is how the price fell into that level, right? You see the hard drop and the consolidation and then the hard drop and then the little bit of drift lower into that discount level, right? It's a price action. Okay. So, you can apply apply the entire process, right, to this Netflix chart. And and I managed to pick off the exact freaking low on that. And I'm not gonna lie, I did actually fumble the bag when the market did eventually start rallying. I wish I'd held it because it went on to deliver more than 10x in terms of return, right? So so there's that to consider, right? But that's a different story. The point though, or actually the thing that we need to focus on is the price action here, right? You can kind of see the way that the price completes, right? And that's something which is important to note. If we actually work through the process, hey, Netflix, have you heard of it? Right? Is there some story, narrative, logic driving price? Yeah, there is, but what's actually changed? Right? Fundamentally, what's actually changed, right? Nothing, right? Their revenues are still there. They're kind of carrying on, right? But just kind of people kind of jumped the gun and said it means people are going to start canceling their Netflix subscription, right? Because, uh, I mean, dude, like I've had Netflix for like 10 years or so. I don't know how long I've had it, right? Nobody even watches it, right? But still, month on month, we end up paying that
That
subscription,
that
right?
that was the narrative. I remember that. I was
Well,
messaging my brother. Like, shit, look at Netflix. This is bad for the economy. People are canceling the subscription. So I was actually one of those people. Like, fuck,
yeah,
because I bought
no,
into
no
that
one was canceling.
narrative. Yeah, yeah.
It was
Nobody
just,
nobody was canceling it, but that was the
yeah,
narrative being pushed around.
yeah, right. And then, I mean, the new narrative was what, right? We're in a rate raising cycle, and this is a cash rich company, which means they can make 4 to 5% year on year just sitting on a bundle of cash, right? Because they're a cash generating company, right? And consequently, all the subscription services, anything that's a subscription service over the course of the last couple of years has rocketed, right? Just on the back of that narrative, right? That this is a cash generating business. And if rates are high, then um, then you can just expect that these companies are actually minting money, right? Because money becomes like an appreciating asset, effectively, right?
Yeah.
That's how it's considered, right? But like I said, the main thing that I want you to kind of consider is like you can apply the whole process to it. There are a lot of social cues. What are the big boys doing? How heavily discounted is it? And then most importantly, the price action as it heads into that discount territory. And you can kind of almost see if you put that side by side next to Intel, you can almost kind of see the similarity in the price action, right? Is it any different, right? It just fell into that hard level in the exact same way. And I don't want to kind of get too much into order book here, right? But that price action is a one-sided order book, right? And everyone always says it, right? I mean, it's quite actually a very simple principle, right? Which is that when you want to buy, you're a buyer. Once you've bought, you're not a buyer anymore, you're a seller, right? And when you're looking at price action like that, if we just kind of take the reverse of that, right? If you want to sell, you're a seller, right? Once you've sold, you're not a seller anymore, you're a buyer. And when you see price action like that, that's why it's exhausting, right? Because everyone was on one side of the book. When everyone who wanted to sell has sold, all you have left are buyers. And it's those same people who sold, right? You don't have sellers in the market anymore. And that's what that price action is. That's what that price action demonstrates. And so when you look at Netflix, I mean, it's the cleanest example of that kind of price action. You kind of have to say, right, where are the sellers, right? They just don't actually exist, right? Even if the price action was down, there are no sellers in the order book. There's only buyers. And that kind of completion pattern is just the kind of dead giveaway, right? So, uh,
Do,
so I just
do you
wanted to give you, yeah.
these types of patterns? Have you coined this in your own way? Because what I normally refer to this is drop base drop. But do you
Mhm.
have your own variation or nuance of this type of structure?
Um, I
Because
mean,
I know you've got your own coined terminology
vocabulary.
and
It's kind of
nuances, but
it's like boost, consolidate, boost. We used to call it, but this is kind of boosting in a downward direction,
yeah,
right? But it's that
yeah,
drop, consolidate, drop, right?
yeah,
But it's the sharpness of the drop, right?
it is, yeah.
So, I mean, this is Novo Nordisk, right?
Mm.
And um, I know you're kind of into your health and fitness and stuff like that, right?
I'm into my
Okay,
doner kebabs as well, yeah.
right? But dude, like peptides is huge, man.
Yeah,
This
yeah,
is it's a freaking game changer,
yeah,
right? Um, Novo Nordisk have Wegovy, right? That's the GLP-1 blocker,
yeah,
fat loss
yeah.
treatment, and whatever, right? But they also have problems, right? Because it needs to be refrigerated, it needs to be stored in a certain way. And because of the way that it needs to be stored, it's very difficult to make it a mass market product, right? Even though it's selling off of the shelves and they can't produce enough of it, right? Okay. it's kind of crazy, right? You know, like they have a monopoly on this product. There is nothing in the market that really kind of competes with it, right? You have Juniper
Yeah.
and variations or whatever, right? But the rally in the stock price was because of that. And then the price starts falling, and it's been falling because Eli Lilly are testing their GLP-1, 2, 3 blocker,
Mm.
right? Which is retrotrutide, or it's
Oh, yeah,
ret.
yeah, yeah. Retro tried, yeah, whatever it's called,
Okay,
yeah.
yeah,
Yeah.
it doesn't have the same storage problems, right? It's still an injectable, needs to be injected, but it doesn't have the same, it doesn't require cold storage, right? Which means that it will be available to a lot wider population base, right? Because it doesn't have the storage requirements, right? And then the next move after that is going to be tablets, right? It's going to be pills, right?
Mm-hmm.
Which will and that's when it becomes a mass market consumer product, right?
Yeah,
You're going to go
yeah.
to Costco, right? And next to the vitamins, there's going to be these freaking like GLP-1 blockers, right? And it's just a tablet, right? You take one tablet a week or whatever, right? So people are scared of needles
Oh
and things,
God, yeah, yeah,
right?
definitely.
You kind of get a sense of, and this thing is absolutely huge, right? Like the whole peptide market, right? It's like you got peptides for collagen, you get collagen peptides, and it's like solving people's knee problems and hip problems and whatever. And
Definitely.
this is solving the problem where people are overweight and like, well, you give it 5 or 10 years, man. There's gonna be so many good-looking people walking around, right?
Yeah,
Like
yeah.
everyone's gonna have like a square jawline, right? You're gonna be ripped and have abs. And
I'll tell you a true story. I tried this shit at the end of 2020. I just wanted to try it.
yeah,
Injected it. Fucking hell, man. It's like I took slightly a little bit more than I was supposed to because you're supposed to build up to the dosage, but fucking hell. Did I have stomach paralysis for 3 days? It was awful, man. You couldn't eat, you couldn't shit, you couldn't piss, you couldn't sleep. You just had
yeah,
constant, well, you had constant diarrhea. You couldn't eat. Whatever you ate just came straight back out. It was, your stomach basically shuts down in a way where any food that you take, it just sits at the top of your stomach. So it's like somebody's constantly punching you in the top of your ribs. And I just don't know why. Now that I look into it, I also wonder if you look at Novo Nordisk and how prices have been depreciating. Is it a case where there's actually been bad news coming out with regards to Wegovy and the side effects that it has? But then what I'd be keen to know is something like Eli Lilly. Is what they're producing somewhat circumvents some of the downsides or some of the
yeah.
bad publicity Wegovy has had? So I don't know. I tried this
I
shit for
think
2 weeks and thought, fuck me, never again. Never ever again. It's not worth it.
yeah, you just overdose, bro.
Never again,
Don't
man.
don't
It's
you don't do
awful.
anything by half, right? You're
Good
like,
lord.
yeah,
Yeah.
it says take 2 milligrams. I'm gonna take 20, man. Let's just leave this.
No, I think it was just a double dose that I took. Oh shit. But
No,
I never liked the way it made you feel. Honestly,
sure.
some people they react fine to it. For
Yeah.
me, it just gave me this
Mhm.
sickly, nauseated feeling for days upon days upon days, and it does. It kills your appetite. It
Yeah.
definitely kills your appetite. But God, you don't feel shit after taking it. So good luck to
So,
anybody who is still taking it. But no, thank you.
well,
Straight pass.
I tried it for I tried it for about a month, the
What?
Wegovy, and I dropped about 10 kgs in that time, and then Mrs. said you have to stop taking it because we're just rowing all the time because you're always in a bad mood.
Yeah, it's
So I had to stop taking it for the sake of my marriage. Man, like if I'm eating chocolates and sugary treats and stuff like this, I'm always in a good mood, man. I'm happy, right?
fair
And
play, fair play.
yeah, once all of that gets cut off, man, I'm a monster, man. I'm just in a bad.
I'll tell you the reason why I took it because I was trying to do a 5 day dry fast. Where on the fourth day or fifth day, I was looking to break my fast with just water. That's the only reason. That was a period where I was fasting heavily. I was doing these 7 day fasts and I was doing 48 to 72 hour dry fast. But people ask, how can you survive without water for 48 hours? Honestly, I just stayed sat or in bed for two to 3 days. But the transformations that you feel in your body, you do feel a lot of if you suffer from inflammation, which I had a back issue, it really does help with the healing process. But yeah, no, thank you, not touching Wegovy ever again. That's it.
So, I'm with you. I'm with you, man. I put the weight back on within a week of stopping, man. But on the upside, that did get me thinking, right? Like, people who take this stuff, they're going to be taking it forever, right?
Yeah,
And
yeah,
from a financial perspective, for the company, you may as well be selling cocaine, right?
yeah,
Because
yeah,
who doesn't want to be kind of, good looking, right?
yeah.
I already have that advantage, right? I have good genes,
Bless
bro.
you. You do, man. You're a
So,
tall,
right?
handsome dude, man.
But but there are ugly people out there, right? I mean,
Yeah.
this is a thing for them, right? Okay, so
You like the George Clooney of crypto, man. You know what I mean? So it's
yeah, man.
we're
I'm
up
like, yeah,
against it.
listen, man. There's just too many ugly people out there, right? That's the problem, man. I'm with Ali G on this, right? You just got to let the
That's
fit
it.
ones in.
That's it. That's it. No, it's all good. Um, let's have a look at the chart for Eli Lilly if you've got it up. You have, haven't you? Is
Yeah,
it?
I'll
Yeah.
throw it in a second, right? But like, I
Yeah.
just want
Yeah.
to quickly just kind of make the point or finish the point on this chart, right?
Yeah.
Um, does anyone remember what level of discount Intel was at?
75%, was it?
Right? Okay,
Yeah.
so um, here you go.
Oh,
Right? Is that
60. All right. Okay.
60?
Fair enough.
Right? Okay. Um, Netflix, 75.
Yep.
Yeah. Right. Um, so we've got Intel at roughly around about 60.
Yeah.
Yeah, but you're getting that completion pattern.
Yeah.
Right? It's kind of making sense, right? Kind of see a point with that. Okay. I'm gonna jump to Lily, right? Because I posted Lily as well, didn't I? Right, at around about 750.
Jeez. Yeah, you did. Yeah,
Okay.
you've been talking
Okay.
about it for quite some time. Yeah.
Man, like this peptide stuff actually, like it's quite exciting, right? Because um, look, I'm I'm long on I'm long on Novo Nordisk, right? Okay,
Mm.
and I've bought this dip, kind of headed into that kind of lower 40s, right?
Yeah.
And I think in the long run, Novo is going to be one of these companies that kind of corners the market,
Mm.
right? Because they're actually working very hard on the tablets and they're working hard on the pills and
Yeah.
stuff like that. And not only that, but they've got a war chest, right?
They
And
have.
any
Yeah.
company that's doing any research, they're just going out trying to buy the stuff up, right? It's like they're going to absorb all the smaller players, right? And just buy the next breakthrough, right? Rather than necessarily having to release it themselves, right? Um, Lilly, Retta has not completed trials yet, bro.
Yeah.
Retta has not completed trials, right? But those trials are coming back so good. Um, like what's happening is Nova, despite the fact that they've got a product in market, it's selling off the shelves, they can't produce enough of it. They've effectively been given a monopoly on it in the States, right? So you can't have substitute products for it. They've got a government deal, right?
Yeah.
It's just kind
Yeah.
of crazy. And there's a lot of things which are kind of going on in that space, which is absolutely nuts, right? Like they're getting hammered for no good reason, right?
Yeah.
They're getting
Yeah.
hammered because hey, Lilly's coming out with a product, right? And Lilly's product is going to be competition for Nova. And remember, the markets are forward looking, right? You don't need Lilly to release the product for Nova to get hammered, right?
No, of course.
And
Yeah. Yeah.
what the market is doing is it's pricing that in now,
Yeah.
right?
Yeah. Yeah.
So, and so this one was actually a little bit of an easy pick, right? It wasn't at a massive discount, but I understood the narrative, right? She fell about 35%, right? And once it rallied back up, when I was posting the chart, it was somewhere around here, right? That has been added to my watch list, and I'm kind of looking for the follow through on that, right? But uh, there's a kind of a narrative play with this. But I mean, Lily, man, she's just doubled in. Uh,
Yeah.
uh,
Well,
she's
could,
literally doubled in
could
the
could you
last.
could you just switch to a daily chart here? Because this is something that when it comes to structures, looking at the likes of Mark Minervini and Kulamagi. So This is what I love about equities because I've got Epic Pen, Will, so I'm not
Say
sure
it's
you
a
could.
bull flag, man.
Yeah, yeah, exactly. So you've got a form of compression that you probably won't see this on your screen, Will, because I'm just scribbling over it with Epic Pen. But when you look at the origin of this move up, this was in 2024 from this low here at the start of the yearly open. Okay, and you've almost got a form of compression. And what I love about this is the fact that with a simple moving average system like Kulamagi, and you know that this was in 2024, and we're here in 2025, and then well, we're not even in 2026 yet, but you can see that you've had over a year's worth of compression and price isn't breaking down. It's making lower lows, but it's not a definitive trend. It's range bound into a form of compression, and such that when you have a form of moving averages where price does this generally tends to be a good buy, and then you're looking for the breakout of compression into expansion. That's kind of the trend momentum play that I often see happening or playing out on equities that you don't see in crypto. And you've got to think about it. The longer the compression, the greater or more expansive the breakout is going to be. And that's one of the things that really attracts me to trading equities as a high time frame. As somebody who wants to move over to trading high time frames, why do I want to fuck about in cryptos that go up for 2, 3, 4, 5 weeks and spend the rest of the 40 weeks of the year flat on their ass and they get a little pump? Versus equities, look at where it's come from in 2023. Look at how price has compressed within this range throughout 2024, 2025. You've had, okay, the best part of your price has done nothing, but you've had now time to prepare that, you know what, there's going to be a big move here. You've got weeks to prepare for this. And once you catch on with the narrative, the fundamentals, like Will said, you're then looking at the reasoning behind why this could do well. All of a sudden, the fundamentals line up with the technicals. Like, hang on a minute, all this is compression. This is the rally, the consolidation or reaccumulation or base before it breaks out again. I think this is for me, summarizes the beauty of trading equities as a high time frame trader. The opportunities are there, the breaks are there. The only thing that comes close to me in terms of the crypto space that's done something similar is BNB. Apart from that, I can't think of any other altcoin that comes remotely close to these type of structures.
No, sure. And like, I mean, I think if you're looking at it from a pure candlestick perspective, right? I mean, it's like you can kind of almost map that breakout. When this price was falling again, I just want to kind of point out this price action thing, right? Which is you kind of see the hard drop into the discount, right? And is that price action into a level is key. And when that was falling, because I understood the narrative and kind of what's kind of going on in the background with this company and the product that they have, honestly, I was praying to God. I was like, please let this fall 50, 60, 70%, man, because then I can just buy more of it, right? Let it kind of do that thing that Netflix did, right? Which is
What was the reasoning? Was this narrative driven, or was this just pure price action shakeout before the rally? What was it?
no, this is, I mean, like I said, Lilly are going to be, they're in like the final phase of their trial for Retta.
Yeah, yeah.
And um, Retta apparently has like hardly any side effects compared to Wegovy, number one. Um, it works differently. It's not just the appetite suppressant, but it kind of also raises your body temperature a little bit.
Raises your
And
metabolism in return.
yeah,
Yeah, yeah,
and as well, it specifically targets the fat around your waist,
yeah.
right?
B receptors,
So
from what I understand.
yeah,
Yep.
that's it. So like with Wegovy, there's something which is called Wegovy body, right? Where people lose a lot of body weight, but it's lost everywhere except around the waist. And so you end up with this kind of pot belly and skinny frame,
Yeah.
right? Whereas with Retta, you have this even loss and you lose weight around your stomach and waist and everywhere, right?
Mm.
And people are reporting less nausea and headaches and other kind of, that kind of initial thing when people first start taking a product, side effects and things like this or whatever, right? So it's a game changer, right? Like once those trials are complete, it's going to be an absolute gold mine, right?
Yeah, yeah.
And That's why when I saw the price, I started tracking Lily because I was tracking Nova, and as well, I started seeing people talking about Retta um, on X and stuff like this or whatever. Even crypto people. I think like David Bell was talking about it, man. I think he's
He
been
was,
talking about
yeah.
it.
He has.
Yeah, right. So
He's been cutting up, hasn't he? He went on his
yeah,
stacking
right.
cycle, and now he's on his cutting phase.
I don't know. I don't know if that profile picture is his or it's kind of photoshopped or
Nah,
something, man. But
it's definitely David, man. I mean,
yeah, right. But
yeah,
so I started tracking Lily because of that. It just kind of caught my eye. Like, okay, right. It's like it's the same thing as Nova. I'll keep an eye on it. But um, that drop was coming on the back of good news, man. And it's just like it just doesn't make any sense at all, right? The trials are coming positive, right? And these guys are going to be sitting on a gold mine. And I didn't actually get the dip here because I was thinking, hey, come on, let it collapse,
yeah,
right? But
yeah,
once it jumped and recovered, so you had that sharp drop, you can kind of see that one-sided book, right? And then it recovered, and I'm like, okay, like the next leg's going to be higher,
yeah,
right? The
yeah,
next leg is not going to be back down. That opportunity is not coming. Anyone who waits for it isn't going to get it. And so it just became a case of kind of slowly loading, looking for the next move higher,
yeah,
right?
yeah. Of course, yeah,
Um, so, so again, it's just all process, right? It's like, have you heard of it? Is there a story, narrative, logic, something driving price?
yeah.
Has something fundamentally changed? Double check the financials. Are there social cues? What are the big boys doing? Is it discounted? Does the discount make sense? Right?
Exactly.
And
Yep.
what stops the discount making sense is the narrative, right? It's like with Intel, right? It's like, there's a narrative, right? But the discount doesn't make sense. It doesn't match, right? And with Netflix, there was a narrative, but the discount didn't make any sense, right? With Lily, there was a discount, but the discount doesn't make any sense, right? Is the narrative is something completely different, and the discount is not kind of reflecting what that kind of narrative is. And then you've got this completion, this price action headed into that completion, which just kind of uh, rounds things off, right? I'm just going to flip just to a couple of others very quickly, right? This is Moderna, right? And Moderna is down like 90% or something, right? So Moderna, they were making the chips that everyone had embedded in them during COVID, right? And
Yeah, yeah. I get it. Yeah,
so Bill Gates could kind of track your bowel movements and
that's it.
stuff like that, man. He needs to know, man, what time to use the
Yeah,
bathroom in the morning.
yeah,
So, but dude, like, listen, it's at a 95% discount, right? And um, you have to kind of wonder, right? It's uh, like there's a narrative here too, right? And the narrative is that freaking weirdo, man, that Robert Kennedy guy or whatever, right? Is like, vaccines give you autism, so you become a good crypto trader. I mean, there's got positives, right? Do you know what I mean? You have a
yeah,
vaccine,
yeah.
get autism, and become a good crypto trader, right? But um, I mean, this is what happens when you finish a vaccine mandate, right? But I was kind of just looking at it and thinking, dude, right? Like at 95% discount, it has probably reached its fundamental value, right, for ongoing operations,
Mm.
right? You kind of get a sense of what I mean, right?
Yeah,
It's just
yeah,
this it's just this discount which is so deep for an ongoing concern for a company which is not going bankrupt, right? Which has a bread and butter operating business.
yes, yeah,
It's probably worth taking a look at, right? Because what's happening is you're making a floor here, and so consequently, we bought that floor, and like I posted it from here, that first rally, right? But I'm a believer, right? I'll just extend that all the way across the chart. So I was posting it early in the year as it was going into that 95% discount. And then if you want to look at the price action as it falls into the discount, I'll probably have to drop a time frame for you to be able to see it, right? But you kind of see that thing in the order book where it drops, that one-sided order book, right? And it just drops into the level, and it just becomes it becomes a really kind of sweet trade. Rallies 30% off of the 95% discount, right? I mean, what more could you ask for? But I think it's a flaw here, right? And I don't have a problem buying, right, at any price on this instrument, because I really don't think that this goes significantly lower. Um, all you have to do is buy and stop washing your hands, right? Induce the next pandemic, and it just takes off again, right? You can literally fix this, right? It's a rigged game, right? So, like wipe your nose with your hands and leave it on door handles at airports, right? The
Yeah,
next thing you
absolutely.
know, right? The next thing you know, Moderna's rallying again, right? But
Yeah.
like I said, I want to explain the chart just kind of in terms of context, right? In terms of the entire process and framework, and you can start to understand why it was on the watch list and why it became
Yeah.
a trend and kind of marry.
It's
Uh,
yeah, it's like fundamentally the company is great, and this is what you perceive to be value. So therefore, you think, well, the company's operating. It's had massive turnover over the last few years. They've got a shit ton of cash flow. There's no reason for them to really be flat on its arse if there's another pandemic, which could very well happen because there's always some fuck up happening every 3, 4, 5 years. So it really wouldn't surprise me if there's another vaccine mandate in the next 3 years, 2 years, 4 years. Probably how I would play it would be like, all right, look, the one thing I like about equities versus altcoins is that if shitcoin A comes out with some news, price barely budges, right? But with equities, you have event driven news. And if it's not fundamental or narrative, it's earnings based or revenue based. So there's always an underlying driver in equities, whether it's positive or whether it's negative, but it always causes volatility, it always causes volume, and volume moves price. Whereas in crypto land, no matter what the narrative is, it can be the best narrative, and sometimes altcoins will barely move. And even when they move, it's 1 or 2 to 3 days at best in a bear market, okay? Whereas in equities, you just saw Eli Lilly. You look at Eli Lilly and you would think, we're in a bull market here. But then when you look at the rest of crypto and altcoins, you think, fucking hell, everything's flat on its ass. So really, if you're looking for the opportunities, in my opinion, and again, I think there's a scope where, as a trader, it doesn't hurt to explore markets that are giving you opportunity after opportunity after opportunity, backed by the fact that you're not just trading some vaporware shitcoin that has no fundamental backing of valuation and utility other than something like Hype or BNB or Solana as a chain. Besides that, what's the driving factor behind a meme coin? Because meme coins are, whatever it is, everybody gets meme coins. There doesn't need to be a narrative. Well, liquidity matters and market context matters, but we've just seen examples of equities that are performing quite well, despite the fact that other companies are, and cryptos for the best part aren't. So that for me is the key point of wanting to explore and trade equities more actively next year.
I mean,
And
the,
yeah,
the thing, you can't dispute the facts with equities because the information is out there.
yeah,
Whereas with a lot of alts, the information is made up, right? And
yeah,
there's no way of verifying, and it is literally just marketing, right? It's just people create a headline and then market it, hoping people will believe it, right? And
well,
uh, so, someone published the numbers last week for the revenue that's being generated by XRP, right? And like it's a few $1,000s a day or something like it was something crazy, right? It's just like an insignificant amount, right? And you have to kind of say, well, it tells you something about the usage of the network, right?
Yep.
When the revenue that the network is generating is negligible, right? Versus what the market cap is for the token, right? And yeah, I think crypto is a little bit crazy like that. Whereas with equities, it's all verifiable, and
Yeah.
the Fed has your back, and Trump has your back,
And it's
right?
quantifiable. It's quantifiable for me at the end of the day. You've actually got a company earnings, valuations. How can you put billions of dollars of valuation on a shitcoin like Cardano? Genuinely asking, like, how is that even up there with the float that it has? It's an irrational market, and irrational markets, you're going to see funny surprises. So for me, when I look at the likes of Cardano, I think, how the fuck is this bag of shit worth more than 50, 60, 70% of stocks are there? It boggles my mind. But then it just tells you that this is the nature of crypto. Welcome to irrational markets. Whereas you can't really value Cardano. You can't put an understanding or reasoning behind its valuation. And that's not to say that you can't trade it. Of course you can trade it. But I'm just purely talking from a vapor coin that really doesn't do jack shit apart from generate fees or whatever. And even if it does that, more for the stakers or the delegates or whatever the consensus mechanism is. Apart from that, what good is Cardano to me? What good is it to you holding it? Apart from you're purely speculating on the valuation of some vaporware shitcoin versus equities where you can actually value it. This is a positive cash flow company that potentially does pay out dividends as well. I think that's what really defines the trade-off between equities and cryptos. I think cryptos are great. Short-term speculations, you're going to get the odd once in a blue moon opportunity to make a lot of money in a bull market. But when it's anything but a bull market, it's going to be difficult to return anything substantial, if I feel. So, yeah, I mean, besides that, I mean, if you're trading and trading is all about the next 1,000 trades, fine. But every now and then you want to be thinking about long-term trades as well to balance up how you approach managing a portfolio of cash, whether that's a combination of short-term crypto trades and long-term equity plays. I think that's a safe bet, and you can hedge out on indices when the market's going down. That's also going to work for you. So it's up to you to kind of structure your trading portfolio. You know, not just your perps account, but how you approach markets overall in general. And I think for me, it's just amazing watching you over the last 8 years from the time that I've been following you in 2018 to just watching you transition from commodities to cryptos now, you know, heavily into equities, whereby you're not the only one to have said this to me, but there have been some other seasoned macro guys who are predominantly trading FX. And one of them, I won't mention his name, but he specifically said to me that there's more opportunities in equities than he can possibly manage. That he wishes he got into equities many, many years ago, as opposed to the last 2 years. And the way that the market moves, the way that it trades, that you can have some very simple strategies, even these boomer moving averages. You look at Kulamagi, who's gone from $5,000 to $100 million as one of the best performing traders ever. You know, and what was his system based upon? It wasn't just based upon moving averages, but it's the way that he applied those moving averages to his system. And I think, again, like I said earlier in the stream, when you look at all the top performing traders who've gone down in market wizards, they weren't trading FX. They weren't really trading indices. It was stock plays, stocks in play, S&B Capital, you know. One of their narratives is stocks in play. They're trading momentum. They're looking to trade momentum to the upside and to the downside. And that's what they're focusing on. And what is that? It's volatility. So really understanding where is opportunity, and with volatility comes opportunity. And then around that, devise a system which makes sense to you. That's something that you can repeat over 100 trades, 200 trades, 1,000 trades, gradually refining your process. And not just one strategy. You may have a range-based strategy and a trend-based strategy. So it's really defining the way in which you trade And I think you've done a fantastic job of touching upon the core fundamental, Will, which is understanding volatility. Understand volatility, what it means, and how you define a system around it, and you've kind of solved half of your problem when it comes to trading. And the biggest problem that I see people having is that they don't quite understand the environment that they're trading in. And therefore, they're looking for swing trades during a range-bound environment. And then when price breaks down, they're looking to long every dip because they think they're getting it at a bargain price. And then price goes lower down. And then it goes lower down again because they're lacking the overall narrative and context of price. So I think that for me has been the key. And I think that's why when I look at equities, I just see an abundance of opportunity. That's probably where I'm going to be heading full time.
Yeah. No, definitely. I mean, I have a very kind of specific market environment that I'm looking for here with these stock trades, right? And it's been easy pickings. And like I said, I mean, everything's on my timeline, right? And so it's like I think, you know, with crypto, I think things are only going to get tougher. I don't think they're going to get easier. I think you know, it's like the the options for what would be a viable trade is becoming less and less, right? You know, it's going to you're going to have your kind of you're going to have maybe a dozen large cap cryptos, and that's it. And anything outside of that is actually trending towards zero. You know, the only problem is, I say problem, it's you know, you have bag holders, right? And bag holders will just hold it and hold it and hold, and you know, price will stay stagnant, right? And so a lot of those tokens are going nowhere. And you know, you're going to have these periods with Bitcoin and Ethereum and ZEC, and there'll be something else. We kind of have these high volatility moments, and then you're going to have coiling, right? And what you know, it's always good to kind of have this multi-asset and multi-strategy approach, right? Where if one market and one strategy is not giving you what you need to be able to kind of extract from it, then you have another market and another strategy, right? And like I said, that's been the case for me, right? Like, you know, while the volatility's been there, I'm quite happy trading flow, like we talked early, you know, with our earlier discussion with those kind of monthly opens and weekly opens and what have you. Um, uh, but you know, generally speaking, the easy money it's been with these stock picks because you know, you have these kind of well-known names trading at a discount, and it's an easy environment to be able to recognize. And all you have to do is kind of follow the process, and uh, you know, the understanding comes very quickly, right? Just from doing, and it grows from there. I think I'll throw out one last one before we maybe look toward wrapping up. Um, it's become a mega session, right?
It's
We've
all
been
right. It's
going
all
for
good. I think there's
yeah,
a lot of
yeah,
value though, Will, because you know we're seasoned traders now, and you've got twice the experience that I have. So anybody who's really paying attention, and I genuinely mean this, there's a lot of fantastic golden nuggets shared on the stream. Like if you go back and just listen to it, I'm not just saying that because it's my channel and my stream. I honestly likes whatever doesn't mean fuck all to me, if I'm really honest with you. But I generally think that I want traders to do really well. And I think if you go back and listen to everything Will has said, it's certainly something that I'm going to go back and re-listen to, especially some of the rules around stock selection. And I think they're great pointers. They really are. But I think what I was trying to get to, and I've completely forgot now, is the question is, since you've transitioned to equities, do you find that you've kind of slowed down in trading, that you're now picking out, not that you weren't picking out quality trades before, but do you find that it's resonating with where you are at in life now? And it doesn't appear to me like you're day trading or you're intra-week trading. It's like you're waiting for really good opportunities, and You're picking them up, adding, and looking for those big reversals or trends back up again. Is that correct? Am I right in the sense where when it comes to trading equities, you're looking at it from a much higher time frame horizon, and therefore those individuals out there who are working full time, perhaps this is a market that they may wish to pivot into. Is that correct? Is that a fair way of
Yeah, like
abstracting everything that you've said and applying it?
sure. So look, I don't day trade stocks, right? I think it can be a fool's errand, or I say it's fool's errand, but it's day trading is a peak performance sport, right? And so it's not really going to suit everyone. With the equities, it's very much looking for a percentage change in price, right? So looking for a decent bounce or a decent swing to form off of a level, right? And so it's a lot more chill, right? It's a lot more relaxed, and you place your orders and you sit and you wait, and then let
Yeah.
time do the hard work, right?
Uh,
Which is
yeah. Sorry, we'll carry on.
yeah,
I just want to quickly squeeze in a few more questions. Um, are you trading the outright stock at direct market access, so you're buying actual shares? And secondly, are you using leverage?
sure. Okay. So um in my process, I think I covered 6 points, right? And I said I'd
Yep.
come to execution and allocation. So I can
Right.
quickly maybe just jump on it, right? Which
Go for it.
is 'cause I think your question is actually headed in that direction, right? Um, the, this is the first Webby I've been on where I've actually made some notes, right? And no, normally I
Yep.
wing it, right? So I've got
Yep.
some notes here in front of me, and I just wrote 1, 2, 3, 4, 5, 6, 7, 8. Talk about these 8 things, right? But point seven is execution, right? So it's like this. Um, there's an element where people kind of say plan your trade and trade your plan, right? And before you take a trade, you need to kind of decide how much of a conviction play that is going to be for you, right? And once you've decided how much of a conviction play it's going to be for you, then you're in a place where you can kind of decide whether you want to allocate. I'll just use the kind of terminology that crypto people are used to. Not everyone's going to understand DMA, right? So, but it's effectively, are you taking a spot position, right? Are you buying the physical stock, right? Called HSBC, they charge you £8, any size position, it's no problem, right? Um, you can trade the CFD, right? Or you can or you can buy calls, right? And take an options position, right? So, I mean, you have a lot of mechanisms that are available to you, and as far as kind of processes is concerned, the important thing is to decide that at the beginning, right? So, how you're going to execute a trade is a part of your plan, right? It's not something which is separate from that. So, for example, with Intel, I actually bought the shares, right? And I also went long on CFDs, right? Okay, so I use I think people are definitely going to ask at some point, but I use most kind of IG.com, right, for my share trading. They're very good. You have almost everything available that you need from them, and if you ask them nicely and something's not available, they will make it available to you, right? So that's a free show, man. I should put out a ref link, right? But they won't give it to me,
Yep.
right? But um, so you can buy the shares. Generally speaking, you can buy the C. You can just kind of trade the CFD. You have to be a little bit mindful of holding costs, right? But that's there in a regular business anyway, right? What I will tell you is that if you're used to positioning on Bitcoin perps, right? Um, if you look at your transaction fees that you're paying, right? Say for $1 million position, right? Or a $2 million position or whatever. Right, dude, right? When you start trading TradFi, what you're going to realize is that you pay more in just execution fees to get into that crypto trade than what your entire stop loss might cost you in TradFi. It's nuts,
It's nuts,
right?
yeah. It really is
Yeah, there's
expensive.
no comparison. It's just it's absolute
It's
insanity, right? When you kind of think of it, right? And so you know you have to kind of take all of those things into consideration too. IG pretty like you know before you execute, you know what your overnight holding cost going to be, you know what your execution cost going to be, you know what your round trip's going to cost you, right? So all the costing is there, it's transparent, right? Whereas with crypto, you only ever find out after you've closed the trade. Sometimes you find out when you try to withdraw, right? How much you still owe your broker, right? You know, you thought you'd made a profit, right? And they're charging you like 2.5 grand, right? It's like,
it's
yeah,
I don't
got
want to tell
nothing.
it. Yeah, I don't even tell you how much I've burnt in fees this year from market
It's
orders. It's fucking insane, and
it's insane, right?
I I, I can't believe
It's
it.
just it,
Even just to scratch a position on Bitcoin, I'm paying a few several $100s just to close out the trade, and like
it's
what the
infuriating.
fuck?
It should
Yeah,
never
it is.
cost
It's
that much.
ridiculous. Yeah,
It
it
should never
really
cost
is.
that much, right? But I mean, it's there, right? So it's like, so like I said, it's you know, you've got to consider execution, right? You can trade effectively, you know, what you'd call perps, or you can, or you can trade spot, and it's just to do with it's to do with conviction in the trade. I've bought shares in Intel. I've bought shares in On Running, right? It's a kind of conviction play for me. Um, I don't know if you've kind of seen these shoes, right? You know, the on cloud running shoes and stuff like this and whatever. Like, I mean, it's a viral product, right? But they're really good shoes, man. Like, you go and buy a pair, and the next day you'll go back and buy a second pair because the shoes are that good, and they're really easy to wear and lightweight and stuff like this. I just realized there's a bit of lag between what I was saying and your chart flipping over. Um, but I mean, I think it's a good company to kind of get into. This is
Yeah.
another one that I posted on my timeline earlier this month, right? Um, dude, like these shoes are selling out, right? If you go to the On Running store, um, I went there and I bought a pair and I went back the next day and I said I want to buy a second pair, and he said we've sold out, right? And I said, what? What do you mean? He said, yeah, they're all empty boxes on the shelves, right? He
The,
said, we get two deliveries a day. And sorry, not two deliveries, we get two deliveries a week. And by the second day, by the end of the second day, it's sold out. And then we're just waiting for the next delivery.
well, that's your
Like,
fundamental
dude,
analysis, isn't it?
yeah, if you can't take a social cue from that, right? It's nuts. And this is a bit like one of my best trades going back to 2020 wasn't just like Netflix, man, but like I had a massive position in Nike, right? And the reason I took a position in Nike was we had this lockdown, and then they lifted the lockdown in spring, and we went shopping, and there were queues outside all of the stores, right? But the queue outside the Nike was going all the way around the mall. It was going all the way around the square. It was like a mile long. And I couldn't wait to get home so that I could put a trade on, right? Because
Yeah,
it was like, yo, right? You know, and so you know it's helpful to just have your finger on the pulse a little bit,
that's it.
right?
That's it.
And the stuff that you like will usually end up being your best trade, right? You know, if you like something, then why not,
Yeah.
you know, own a part of it? If you use Uber a lot, then why don't you own a part of it, right? You know, if you're using DoorDash, why don't you own a part of it,
Yeah.
right? And
Great way of
whatever,
looking
it's
at it.
like
Yeah.
it's a
Yeah.
sentiment, like it's
It is.
just studying your own sentiment, right? In a way. So, I mean, this is like on running is something to keep an eye on,
Yeah.
right?
Yeah.
But like so like for execution, right? Like I said, it's the main thing is just decide what type of play this is for you, right?
Yeah.
And and once you've made that decision, you can choose between you can choose, right? And then the final point I want to make on that is just about capital allocation, right? Which is that um, before I position, I also decide if I want to buy more if it moves against me, right? And it's really important. I think it's vital for that to be a part of your plan, right? Kind of say, hey, look, I'm going to buy this, and if it drops more, I'm going to buy more. Um, if that is not a part of your plan and you get in and it drops, you're going to go full tilt, right? You're going to lose all sanity and ration and logic, right? And you're going to start kind of making bad decisions because I guess it becomes that kind of sunk cost fallacy kind of thing, right? I've already buy some, why don't I buy some more, right? The key thing is to decide before you engage how much you're going to engage and where you're going to engage, right? And then you have to absolutely stick to that plan, right? So, sometimes I decide I'm just going to buy and hold it, right? And if it drops to a certain level, I want to exit. And other times I decide, hey, I'm going to buy some now, and if it goes deeper, I'll buy more,
Well,
right?
don't tell the XPL buyers that, will, because that
Well,
fucker keeps dropping. But yeah, it's a great point. It's a great point. You just hit the nail on the head, and the reason I've cut you off there is because people, for the best part of 2 months, I've been watching my timeline. I bought XPL $1.20. It's going to 5. 80 cents, I'm adding more. 70 cents, I'm adding more. 60 cents, I'm adding more. 50 cents, fuck, I'm down under. I'm just going to buy some more here. Are they really buying, or are they just bullshitting the fact that, how much are they actually going to fucking keep dollar cost averaging into that shit? Or are they just grossly underwater that they just don't want to admit that they fucked up on the trade and are now just hypothetically tweeting that, oh, I've added here, but they've not added shit, in my honest opinion. And it's about saving grace, but realistically speaking, I think of it the nail on the head. If price is going against you and your attention wasn't to add, I'm personally of a slightly different opinion to yourself, Will, respectfully. I like to buy at the base and then probably on the right hand side of the V and then looking to add up on the way up. I just feel as though I can scale into the trade with a logical invalidation. But I think what you've said also sounds true. It's like if you're buying at a certain level or certain zone and it starts breaking below, then you should know from the outset whether you are adding to the trade or whether you're actually going to cut it, accept the loss, because you now know that you can buy at a bargain even lower down. And sometimes you have to take a few scratches to get into the right trade and the right timing. Timing the trade is very, very difficult. I think it's one of the most difficult aspects of execution. So it's just fascinating to see that the slight differences and variations as to how we do execution. But, it's amazing just to portray that to the viewers that there's no one approach that works. Everybody's got different approaches.
Like I said, my main advice is that you need to have decided it beforehand, right? That's not something that you should ever decide in the moment, because the most objective you're ever going to be is before you execute the trade. And the moment you've executed, you're not objective anymore, right? Because now you've got skin in the game, right? And all of that objectivity is just out of the window, man, because you just need that position to win. And you will convince yourself, right, that you're right. And you end up going full tilt and making bad decisions, right? So if you've decided that beforehand, you won't make that mistake, right? You have to always make it a part of your plan, right? If it dips, am I buying more? Am I getting out, right? And if you've considered that at the beginning, that's the most objective, rational, logical decision you could make, right? But in the heat of the moment, I mean, everyone gets caught, right? Look, I've been doing this 20 years and it still happens, right? I do get caught in the heat of the moment sometimes, right? And I don't think there's ever been a time when that's happened and I didn't regret it the next day. Like you wake up the next day with a financial hangover, right? Because you went against the plan, right? And there's an element of that which is just human, right? But what happens is, when you've made that a part of the plan, you make those mistakes a lot less frequently, right?
Agreed. Yeah.
Because there was a conscious decision about wanting to behave in a certain way. Whereas if it was never a part of the plan, that's never going to work out. And my first mentor, he this is something which he always kind of impressed, man. He said, people lose money because they didn't know how much they were going to lose.
So true. So true.
Right?
Massively true.
It's
Yeah.
like,
Yeah.
whereas if you've decided that, if you know what it's going to cost you when you're wrong before you take the trade, right? That's the most you'll ever lose. But if you didn't decide exactly how much it's going to cost you when you're wrong before you took the trade, you'll lose everything.
You lose everything. You lose a lot. And I can honestly attest to that. One of the biggest factors in my transitions as a trader, in all honesty, is that when I get into a trade, as much as I don't want to lose, I'm very, very comfortable about losing X percentage of my account, and I'm absolutely fine. And I've even said it on the mentorship that generally when it comes to trading, I'm only risking nowadays between 0.2, 0.5 or 1% of my trading account. I'm not even talking about P&L valuation. I'm not thinking like 2K, 10K, 20K. All I've got in my mind is that I want to lose, if I'm going to lose 0.5%. And when you think about that, if I get 10 trades wrong consecutively, I'm only down 5% of my account. That for me is phenomenal risk management because I know the probability and the odds of losing 10 consecutive trades for me is quite low. I generally have a 45, 50% win rate. So I know that every 2 trades that I take, I'm probably going to win 1. Every 3 trades that I take, I'll probably win 1. And despite the fact that I may lose 0.5% on 2 losing trades, I know there's a good chance that at 3R, 4R, if we're using the concept of R, that I'm going to make back and probably more on that winning trade. And then you've got to factor in, well, if it's a winning trade, can I add more size? And add more size doesn't mean that at the point of execution, it's scaling into the trade as the trade is developing in my favor. Yet my risk is static at 0.5%. But I'm trailing my stop whilst I'm adding on to the position. That is how I compound a winning trade into, it exceeds the fact that I've lost 0.5%. And I did that really well on SEC. And I showed a point where I had 4 points on the chart where I've shorted, all part of one trade. That was a huge short for me compared to, I've just lost 0.5% of my account. So I think that's the trade-off there, Will. It's when I understood that for me, again, was one of the key defining points. Because before that, I used to think, fuck it, I'm going to risk this much of my account. Well, I didn't even really think about risk. I didn't even really think about how much I'm willing to lose. I didn't even accept that if I'm offside by this much, this is where my cutoff point was. It'd be right, I'm going to enter here. I think this trade is going to work out. 2 days later, I'm 5K underwater. Oh, fuck, I'm just going to wait for it to bounce. I want to get back out of break even. 7K, 10K underwater, 12K underwater, 15K, 20K. Fuck's sake. Let me just add more here now. I think I can double down. 30K underwater. That's what happens. That's generally what happens. You go on a tilt. And all you have to do at the very start is exactly what Will said, is tell yourself definitively that this is where your hard stop is going to be. Psychologically, mentally, emotionally, P&L-wise, process-wise, this is it. If you're wrong under here, get out the trade. Because it's all about survival. It only takes one trade to blow your account, but you need to make 1,000 or 200 or 400 or 500 good trades to say, you know what? You've got a long-term career in this space. That's the honest truth. That's I can't frame it. I can't phrase it any other way. That's just, as somebody who's been there, has been on losing streaks, has lost a lot of money in my early days in 2018 and 2019 on perps. You have to be absolutely serious in the way that you approach this industry, because you are competing against some of the best firms, some of the best commercial players, some of the best algorithms. So what's going to give you a chance? You really have to give yourself a chance to survive. And that's where, for me, the risk management aspect comes into play that Will has been talking about.
For sure. Um, okay. So I think in terms of in terms of the process for on the process side, right? Just kind of rolling back a little bit, right? We've covered everything, right? So have you heard of it? Is the story, narrative, logic driving price? Have the fundamentals changed? Double check your financials, social cues. What are the big boys doing? Is it at discount? Does the price action, uh, is there a price action completion pattern at that discount level? And then we've talked about execution and we've talked about allocation, right? So, um, yes, there's a lot there for people to work with. Yeah. Um, I can take one last example, right? Just for, and
Can
then
can
maybe.
can
Yeah,
can, can Will Hunting start up a 10K equities account in January 2026 and run it up?
like, dude, I could run it up to take long, man.
Yeah,
I just need someone to go head to head with
yeah,
because then I get super competitive. And I mean, that's what happened with that Cresco challenge, man. It was
yeah,
just kind of, it was just super competitive, right? And I started last, right? And
yeah. I remember.
you know the reason I started last because everyone started on the 1st of January,
Yeah,
right? And I started like late February or something, right? Or March or whatever, right? And the reason was that I thought, if I start at the same time as everyone else is just going to give up, right?
yeah, yeah,
Because I know what I can do,
yeah,
right?
yeah, yeah,
It's like I know what I'm capable of, right? And whatever. And I think if I'm head to head with people, I get super competitive, man. And
yeah.
it's just like
Brilliant.
whatever. But no, it's yeah. Anyways, it's definitely do. I mean, I did. I think the first challenge I did was 10K to 100K or something.
Yeah,
I was doing that a year the before the Cresco
yeah,
thing,
yeah,
right?
yeah,
The Cresco is like a regulated competition, right?
mm,
So, but like a year before, I'd kind of done that challenge and stuff and whatever, right? And all the trades were being called in public and splashed all over my timeline and
yeah,
everything, man. It was quite a cool experience. Listen, I want to close on a couple of charts, right?
yeah. Go for it. Go for it.
Okay, so this one is Porsche, right? You want to buy a Porsche? Let's do it, right? Interesting thing, like just to kind of tell you, right? It's not my chart, man. Like someone actually posted the ticker to me on X, right? And when he posted it, I took a look and I thought, yo, right? Now look at everything that we've been talking about in terms of process, right? And this is what I mean. It's like, there's a chart and there's a market environment. And you got to say, is that instrument in the kind of market environment where my strategy works, right? And um, when he first sent me the ticker, I took a quick look and I thought, well, maybe what if she does take a dive, right, down to that 70% discount, which will give you 36.20, right? So I've layered some orders there, but I will say this, right? I am equally happy to take some exposure at market, right? Because um, there are a few kind of things going on in the narrative here. Actually, there's a lot of moving parts when it comes to Porsche, right? But Germany has been hit particularly hard because of this Ukraine war, right? And it's just to do with energy costs, impact on industry, and things like this. That's like one side of the equation, right? Um, the other side of the equation is just like the electrification of a supercar, right? Which is just tapped, right? Someone ought to get shot in the head for making that decision. Like a little while back, you saw these kind of like all electric Porsches drive. Like when you buy a car, you buy it for the noise it makes, man. And if it's making this humming noise, that's not the same as vroom vroom, right? So. I think that there are a few different kind of factors which are kind of affecting the business here, right? But um, there is no world in which I imagine Porsche trading at zero. There's no world in which I can imagine that, right? It's a bit like Intel, right? And a lot of this is actually just owned by Volkswagen, right? So there's not like there's not that much circulating supply. Actually, there is a decent amount of circulating supply, but Volkswagen is like the major shareholder, and I think the discount is deep enough, right? We're at that kind of place where you can start thinking about loading up, right? And the next move can be higher, right? And so this has become a play for me, right? And I'm actually looking long term at being long on long on Porsche, and
Yeah.
you just have to let that price double, right? And then use the profits and go and buy one, right?
Yeah,
It's a
that's what I was going to say to myself. I fancy
and
a
then
Porsche. If I'm going to buy one, I might as well
so
trade my way
well,
there.
what you do is you go and buy the stock and buy the car, right? And
That's it.
and then that makes the stock go higher, right? So you buy more stock and buy another Porsche,
Well, it's
right?
a
So
pair
you've got
trade, isn't it? You're down on
his
your
and hers.
you're down on your bloody
Yeah.
vehicle in terms of depreciation, but you're up on the stock value. So
Yeah, I mean,
it's
you'll have
it's a good delta neutral strategy, isn't it?
well, like, I'm just thinking it's like it's a self-perpetuating motion machine, right?
That's it.
This is what the Lunar Foundation tried to achieve, right? And
Yeah,
they
yeah,
failed, right?
yeah,
But we do this, right? Buy some stock, buy a Porsche. The price
yeah.
rallies, pays for the Porsche you bought. Buy more stock, buy another Porsche.
That's it.
The
Right.
price rallies, right?
That's
Buy
it.
another Porsche, right? And the next thing you know, everyone's got a Porsche,
Right.
right? It's a master plan,
I'm off to the
right? And
dealership to buy a Porsche with $44,000.
that's it.
That's it.
Do it.
And then
Do
I'm going to
it,
buy
right?
$44,000 worth of the stock. And if they both
Just
fucking go down, I'm coming to you with a Porsche for a refund.
well, you walk in with your share certificates, right, and tell
Yeah,
them, look, in
yeah.
6 months,
Yeah,
right? In 6 months, this is going to pay for it, right?
yeah,
And
yeah,
and that's how it's done, right? But look, I think this is a play, right?
yeah.
And I think it's worth kind of
Well,
uh, it's worth getting on board with.
we've got Captain Slow in the chat, and is quite a car connoisseur. So I wonder what his thoughts are. He's always wheeling and dealing in high-end prestige cars. So, Captain, what's the thought, man? Is that a good strategy? Buy a physical Porsche and buy the stock to hedge out. We'll soon get an answer from him.
Well, just get something with a petrol engine,
Yeah,
right?
yeah,
I mean, look, this is what happened with AAP, right? So, I mean, like early this year, I was calling AAP like AAP Advanced Auto Parts. It's like in the US, that's the equivalent of our Halfords,
that's it.
right?
Yeah, yeah,
And I mean, that stock price had been falling forever. This is no joke, man. It's like that had literally been falling forever,
yeah,
right?
yeah.
And the entire price drop is because of electrification, right? And I mean, as you kind of get that shift towards electrification, what happens is the number of parts that are being used in a car just become less and less, right? And so you can kind of understand why it's fallen off so much, right? But the moment Trump came in, right, and at his inauguration speech was this spike here,
Yeah.
right? He was like, listen, man, we're going to bring motoring back, right? Screw electrification, right? We want vroom vroom, right? We want cars that make noise. And I mean, like that stock, right, has literally kind of doubled this year from lows,
Yeah.
right? So, I mean, I think Porsche can make a comeback,
Yeah.
right? They
Yeah.
just need to get back to, and they're not stupid, they know, right? They just need to get back to why people wanted one in the first place, right? Which is just noise pollution, right? It's like you want your car to be featured in the Community Watch newsletter, right? Someone's driving around 2 o'clock in the morning with it's like you want the pensioners complaining,
That's
right?
it. That's it.
Right? That you're pulling into your drive at 2 o'clock in the morning and going rum rum, right? And whatever, right? So they'll get back to it. And remember as well, markets are forward-looking, right? That price will move first.
That I mean,
That
when you look at it this way, this is a big discount. Um, whether it's perceived value or not, and what your strategy is to trade it. Well, when I say I'm talking, generally what people's strategy is to trade this is what's going to be fascinating for me personally. Gun to head, I'd probably be inclined to pick a little bit up, and then I'd wait for the momentum to break up, and then I'd add more to chase it higher.
that's it. It's like this one, I will buy, and if it dips, I will buy more.
Yeah,
That's my
yeah,
plan,
yeah,
right? So I'll buy, and it dips to 36, and I'll buy more, right? And then
yeah.
I hold, right? And then just let the market do its thing, right?
Sure.
That's my plan. But remember, markets are forward looking, right?
Yeah, yeah.
The price that you're looking at today is is what people thought it would be worth in the future. It's like and so what will happen is this price will shift before Porsche makes its move, before it makes its comeback,
Of course, yeah, yeah.
because people will price it in. It's exactly like what's happening with Lilly, right? Lilly stock has almost doubled, right? And because people are pricing in what's going to happen when they
It's
release.
it's not. I wonder if also in terms of like, I don't want to use the term insider trading, but inside information. Insiders know what's happening, right? People are at the firm. News gets leaked out to certain sectors or certain players, and before you know it, the chart's moving before any fundamental or news. And then when the news comes out, you'd normally get the gap up, don't you? And have you ever seen those gap ups where price gaps up based upon some fundamental reasoning, and it just continues running?
Yeah,
Brilliant plays to long, and those are what I talked about earlier: event-driven plays, news-driven plays, fundamental reasoning that causes an ignition in price to start trading significantly higher as all of a sudden all eyes are on this given stock. Why? Because if you think about the world of trading and how everybody's trying to chase momentum, because what do you think is going to happen? Everybody's going to pile into that one trade. It's like the Zcash. Look how it went from $30 to 700. All of a sudden, everybody's jumping into the one thing in the crypto space whilst everything is going down. Where's everybody going? They're rushing into Zcash,
yeah.
because that's where all the attention is. That's where all the eyes are. That's where all the momentum is. So anybody who's parked in a coin that's going sideways, they're going to jump onto the trend, because that's trend trading for you. Systematic trading, algorithmic trading, commercial players are looking to ride that momentum up until that momentum fades. So again, this is something where when I look at this chart here, well, I just see a potential base developing, a form of accumulation. If this continues into 2026 and it holds the lows or trades around the lows or within this range, I think it becomes a very attractive buy.
I mean, the company has fundamental value, doesn't it? That's the
Yeah,
thing, right?
yeah,
And so it's got to make a base somewhere,
yeah,
right? Um, it's not going bust. It's not going to zero, right? That's not imaginable, right? There isn't a fundamental shift here. All that's got to happen is that either they're going to release a really popular model, or the Ukraine war ends,
yeah,
right?
yeah,
And and I honestly think that is like a huge factor in this, man. As soon as that wraps up, and it looks like we're kind of getting, like Zelensky's going kind of kicking and screaming, right? But it's it's kind of getting closer to that point, right, where he kind of capitulates and kind of gives into the pressure, and this whole stupidity kind of wraps up, right? So. And I think that that will be the turnaround for German industry, right? Because it means uh, they can go full stream on buying Russian gas again, right? Or whatever, right? And get cheap energy back in. So, it'll just be it can be one of the catalysts, right? But it's a play, right? So that's
yeah,
something.
yeah. No,
But
great stuff, Will.
but
Yeah,
but, but I think it's only kind of fitting to maybe close with with the crypto chart, right?
yeah,
So
yeah,
my only it's not my only, but my kind of major kind of play in spot right now is Casper, right? So I've posted this on my timeline, and I did a post in TG as well, right? And I'm the biggest ignorant when it comes to kind of crypto and stuff, right? People usually have to explain to me what the token is, right? And what it does. But I just came across this wild post, right? Where there's a dude, right? And he's beefing with CZ, right? And I mean like proper beefing, right? And so he was kind of nominated the Casper team, and this guy, he's the founder. He was nominated for some award, and from Binance or whatever, top 100 crypto influencers and developers or whatever, right? And the guy just went straight into beef with CZ, right? And just about October the 10th, right? And that kind of crash that was caused by Binance, right? And the margin, or all the unified accounts crashing, and then you had the cascade across all the markets and stuff like this. And the guy literally just stuck a middle finger up.
Yeah.
And I saw that and I said, yo, right? And this is his project, right? And therefore, I'm long, right? So that's the narrative, right?
Yeah.
That's the logic, right? But on a more serious note, right? Like it's quite an interesting project, right? It's like cipher, they call it kind of cypherpunk crypto, which
Yeah.
is you've got these guys who are the kind of OGs, right? Like the guys who were there at the launch of the Bitcoin white paper, the guys who kind of got into crypto right at that moment because of that early kind of dev crew, right?
Yeah.
Who fell in love with blockchain, the product, and the blockchain, the pipeline, and everything to do with it, right? And the founders are from that era, right? These aren't your kind of like they're the real crypto heads, right? This isn't the kind of in it for the money guys. These are the guys who develop the tech, right? And so what they wanted to do was to create a token that is what Bitcoin should have been, right? And that's what Casper is about, right? It's like a proof of work concept, and this kind of the way the blocks work and the dog network or whatever, man. You can like read all about it, right? It's quite kind of interesting, right? But I was kind of fascinated by that, and I thought, listen, man, anyone who can stick a middle finger to CZ and wants to go head to head, chest to chest with the guy, while everyone else on social media is just kind of kissing his ass and like kissing his butt cheeks or whatever.
Yeah.
You can respect that guy, right? He's a real one, and so because of that, I started buying the project. And I think I messaged you on WhatsApp, right?
You did, yeah, yeah, you did, yeah.
So I mean, we're kind of clean in the money at this stage on our early positions,
Yeah.
but I've set it for daily buys now, right? So I'll keep buying a little bit. You know what my kind of exposure target is,
Yeah.
but to the upside, initially I was kind of thinking back to all-time highs, which would be like a 4 or 5x from here. But look, why not a dollar, right? Why not 20x? Why
Yeah.
not 5 or 10? Um, this could be the next ZEC,
Yep.
right? It could be. It's made in the same mold, right? It is, ZEC as well is kind of, crypto cipher punk kind of
Yeah.
dev, right? And this is exactly the same. And like I said, seems like solid people behind it.
Yeah.
There's no VCs involved in this project. There's no VCs. There's no unlocks. There's nothing, right? The tokens are distributed, right? And that's something which is kind of really important when you're thinking about investing long term, right? Because the last thing you want to find is that you invest in something and then some VC gets an unlock and he dumps his entire supply and takes 90% of price with it, right? So,
Yeah.
I don't think that that's a possibility here, right? It's not in the equation here because there are no VCs, right? So I don't like, I've got a bag. I'm adding a little bit more to it, right? And I think 100x, why not? It's 100x or zero, right? But it's a
Yeah.
play for me.
Yeah,
So
of course, yeah. I think you've got to have one or two plays in crypto that you just buy a bag. If it goes up, great. If it goes to shit, fine. You can live with that.
but you check back in on it in 3 months or six
Yeah,
months,
yeah.
right? And I mean that's the way to do it, isn't
I
it?
think,
It's like,
yeah, it is. I think the one that I'm really eyeballing, and I haven't really talked about it, and I don't want to buy it here, is Hyperliquid token.
hype, I'm a big
Yeah,
fanboy of.
I think if, dare I say it, if shit hits the fan and by some miracle it goes really deep down into the lows, the cycle lows, okay? Because this for me is a breaking structure. It is continuing to print lower lows and lower highs. If let's just assume hypothetically Ethereum, Bitcoin gets another leg down in the next 6 months, where is hype going to be? You know, we've had all this bullish news and positive fundamentals and a real reason to buy hype, but yet all it could muster was $60. So if we can get 10, 15, 20, I don't know where the lows are going to be, but if I can get value, real value, where it's down from its highs near its cycle lows from April, right? I'm thinking $100. Generally, I think, all right, $50. I'll take some off, significant amount off. The remainder, $100, and I'll probably trade a bag as well. So it's one of those plays where if I see value, I'm going to buy it. And if I buy it, it's a spot buy. And then when it's trending up, I'll trade it on perps as well. That's essentially how I'm looking to play hype here. But we'll see. Let's see where we are. I mean, $36, you know, if I'm targeting 100, not bad. 2x return, but I really want a 5x from something like hype. So that for me is somewhere down to $20, $18, $16, $14, $12, $10, wherever. Somewhere in there, build a base, and I'll certainly be looking to buy.
Sure. Now I got a fun story for you,
Yeah.
right? I'm banned from the hype Discord.
Legend.
That's super bad, man.
What did you do?
I got banned within like 2 hours of being on there, man.
Oh dear.
Right? It's like but no, I like hype, not from. I mean, I don't use the decks or anything like this or whatever. But what I know about hype is this, right? That the people who use the product love it,
Yeah, yeah.
right? And they are hardcore, right? And that's why I'm banned from the Discord, right?
Right.
It's like, I learned very quickly how much they love the product, man.
Yeah, yeah.
Right? And they're super hardcore, man. And this is why, like I mean, with the Asta launch and things like this, like one of the things I was posting was I said, look, man, Asta doesn't really compete with hype, man, because
Yeah.
they're not gonna take hype users,
No.
right? What they're gonna do is transfer users from their own from the sexes, right? Or
Yeah.
other, right? But like this isn't a competition with hype. It's not there's Asta, therefore hype should lose value, right? I think
Yeah.
I think the volumes on hype are holding up, right? Because like I said, it's the people who use it and the people who build on it, they love the product.
It's not just an exchange. It's a whole entire ecosystem.
Yes, an ecosystem. People build on it, right?
It reminds me of when I used to be really, really fucking perma bullish on BNB, even though I fumbled the bag. I remember tweeting about BNB on my timeline in 2020, 2021, that BNB is going to be big. Like they've launched the BNB chain. It's got its own token. They're doing token burns. It's part of an exchange. It's the biggest exchange in crypto. This is only going to keep going up. I would never ever short BNB, and I can't believe even to this day that it's traded $1,000. And I remember owning a big bag in 2017, and I was shilling it to one of my friends like, "Hey, buy BNB. It's 20 cents. I reckon this is going to go to $10." It got to $10. I didn't have a bag at $10. I've bought BNB in and out. I bought 600 and sold it at 1200 or 1100, wherever it was. Took about 9 months to play out, but it was a good trade. But for me, hype reminds me of what Binance was back in 2020. And when you look at the valuation of hype compared to Solana, unless something fundamentally fucks up, or there's some regulatory aspect that comes out and bans perp dexes, I think the narrative is there to really see this push up into the top 7 crypto projects. So we're talking about outside of Bitcoin, we're talking Ethereum, we're talking Solana. Let's just leave XRP because XRP is always hovering around the top 5. I hate to say it, I don't know what else, but potentially I think Hype could be in the top 5 crypto projects in the next cycle. And if the valuation of the market keeps going up and to the right, where total market cap is increasing every cycle, then I don't see a reason why this can't trade or eventually tag $80 to $100. And even then, its market cap would kind of come in below Solana's, given Solana stays relative to where it is today. So that's kind of my thesis on Hype. I'm looking to buy perceived value over the coming months or next year at some point.
Yeah. Yeah, no, I think Hype will definitely be an interesting play. It's
Yeah.
like you just got to look and always you always have to think what survives in the next cycle, you
That's
know?
it.
And you
That
don't want to kind of get caught off guard and be taking exposure to something that doesn't really have much of a chance.
Yeah. No, I think for me, Hype is probably one of those plays where I'd feel safe buying it, if I'm honest with you. And I think the other key aspect is, Will, like when you look at how crypto exchanges are enforced to report to various government bodies, like take the UK for example, all crypto exchanges will have, I believe, don't quote me on this, but there's something in the news that came out where from 2026 January, all crypto exchanges have to provide data to HMRC.
Yeah, I know.
No, I'm not going to comment any further, but I
I'm not
think
looking.
I
Say
think
less. So say
I,
less, bro.
I
Say
think
less.
if you can join the dots, you can see why there's going to be an increased drive towards perpetual trading in the future
Well, yeah. I mean, like, look, it's happening
on
already, right?
Dexes.
Like, I mean, I've got I'm kind of running my own kind of little Dex thing, right, with lol Dex,
Yeah,
and I mean, a few of the guys who are using the Dex very actively, right? For example, based in the States, right? And they're kind of managing their retirement fund 401k type of thing or whatever, and trading crypto on DEX, right? And the reason they're doing that is because the amount of paperwork that would be required for them to KYC through Coinbase is just immense,
yeah,
right? And whatever. And so, like, it's everything is kind of procedurally, it's accurate. Like they're not doing anything which is um, off-piste or anything like that, right? But using a DEX just makes, in a lot of regulatory environments, right? It just makes a lot more sense to be able to do that than to be working off an exchange where you have to KYC, right? And
yeah,
I mean, even with kind of UK, I mean, you could potentially allocate, for example, if you've got a self-invested pension pot, right? Like you got SIP or something, right? I mean, you can do an OTC deal, buy some crypto, put the crypto on a DEX, right? And you've got crypto exposure. You don't have to go through um, like necessarily kind of regulated exchanges and things like this to be able to do it. There's a lot of kind of workarounds that people find just because sometimes the difficulty of getting an account for your 401k, right?
yeah.
Or getting a corporate account even, right? It's just become a lot less straightforward than it used to be a little while back, right? There's like a lot more documentation that exchanges are asking for and things like this. But
It is.
I
It
mean, these
is.
are just
It's
problems, right? They're just problems. You have to kind of solve them in terms of procedurally so that you can reach and have an asset that you need, right?
Yeah, it is. I put it up on the screen, Will. So the law comes into effect on January the 1st, 2026. All UK-based crypto asset service providers, CASPs, including perpetual trading exchanges, must start collecting and reporting detailed user and transaction data to HMRC under the new crypto asset reporting framework. This information will allow HMRC to automatically cross-check against your self-assessment tax. The problem that you have here, and I'll explain why this could be a problem, because if you're trading crypto and you have let's just say you have a job elsewhere, you can essentially say, yeah, I'm trading, so this is CGT. But if HMRC that your transactional throughput is actually quite high, they can say, you know what, fuck you, you're actually trading full time, and therefore we're going to hit you with income tax, not capital gains tax. And I think that's where users have to be very careful as to, are they passively trading or actively trading? Because I know one or two people who kind of fell down that route, and HMRC turned around and said, no, sorry, sunshine, but you're paying a lot more tax than you've declared. So
Yeah, I mean, as long as it's not your only income, right? And
correct.
I think that tends to be the main kind of criterion that they use, right? And again,
Yeah.
I've kind of had a few run-ins here and there over these issues.
Yeah.
Um,
It's always a sticky subject. Yeah.
yeah, but um, yeah, like generally speaking, what I tend to find is that I don't know, like look, you can be a little bit cheeky, but you shouldn't be too cheeky, right? And if you have dues, just pay them, man. Like you don't
Yeah.
want to spend you don't want to spend your time looking over your shoulder, right?
That's it.
And
That's it.
but
Yeah.
and for what, right? Like
Yeah.
if it's a couple of milli, right? Yo, right, run, right? But
Yeah.
over a couple of quid, right? And so you need to really kind of balance things out. Generally speaking, I have a trader coaching business, but as well I have a life coaching business, right?
Yeah.
And what I always tell my kids, right, is um, what is it? Like fines means legal for rich people, right? So you look, if you want to do something and you're going to have to pay a fine, if you can afford the fine, do what you want, right? But draw the line at prison.
Yeah. No, I
So,
agree with you,
like,
but
if you're going to do something and you're kind of risking having to do bird,
that's it.
right?
Yeah.
And do time. I don't think that is ever going to be worth it,
It's
right?
not. It's never
So,
worth it. No. Yeah. Exactly.
yeah,
Agreed.
so my kind of my general kind of advice with this kind of stuff, man, is like, you just gotta make sure, dash the T's, dot the I's, right?
Yeah. Yeah.
And most importantly, don't get caught,
No, I
right?
think honestly for me, well, I think just stay above board, sleep well at night, wake up, without any burdens on your shoulders. But I think the main point that I really wanted to touch upon was the fact that fine, there are certain individuals like us who will pay what we need to pay, and that's fine. But then you've got to look at it from the flip side. There are probably going to be more users who are going to leave central exchanges for this very reason. And that's going to be a driving factor behind the likes of Hyperliquid, which then means more revenue for them, which means more token buybacks, which
Yeah,
means more
actually,
utility.
that's an
So
interesting
it's,
point.
so
Yeah,
it's kind of like a
Well,
positive feedback loop that
yeah,
is
it'll drive
self-recurring.
people to the dexes. Yeah.
Yeah, that's how I'm looking at it. Like and
But,
this is
but, but
just
the
the
only
UK.
problem we have then is with the off-ramp issue, right? So, like when you do want to cash out, you don't have a lot of choices, right? And all your off-ramps are in a regulated space.
Absolutely.
And I'll tell you
Yeah.
something interesting, right? Like, Kraken, they've got this Kraken Pro, right? You pay like 10 quid a month or something,
Yeah.
right? You get Kraken Pro, and you kind of get a reduction in your transaction fees for conversions and things like this or whatever, right? They introduced it earlier this year, I think. And the interesting thing is, um, you can only subscribe using a debit card, right?
Yeah. So
You
they've got
can't pay.
they've
You
got you.
can't pay
Yeah.
in crypto
Yeah. Yeah.
for the pro services, right? And I mean, I did think at the time, man, I was like, man, this is how they get everyone, right? It's like, hey, it's your card details that were used to subscribe, right? So now we can finger you, right?
That's it. They've
Because
got you. They've got you.
this is
Yeah.
your account,
Yeah.
right? Otherwise, why was your card detail used to pay for these services,
Yeah,
right? And
yeah, makes
so,
sense.
I mean, like, look, there's stuff like this which I think is a little bit cheeky, right? And it's like, I mean, when you can kind of see it coming almost, why they would do that, why they wouldn't be, for a crypto native
Well,
platform, right? Not to take payment in crypto,
look, I
right?
mean,
For a very specific service, and almost kind of demand, yeah, it's got to be card payment, right? Otherwise, you're going to be paying hundreds of dollars extra in fees every time you do a conversion, right? It's just nuts.
look,
And
Will, I was
uh,
saying,
yeah,
people want adoption. Unfortunately, with that comes the rails of regulation. So, you know,
yeah.
which do you
But
want?
I don't know, man. Not regulation though.
No, but yeah,
Yeah.
rhetorical question,
Well,
of course. But
well,
yeah,
well remember, I'm a crypto cypherpunk guy now, right?
right.
I'm
Fair
kind of
play, fair
I'm in
play.
it for the tech now,
Yeah,
right? As long as my bags are pumping, I'm in it for the tech, right?
that's it. That's it.
That's the that so but
No,
no,
I think,
yeah,
yeah, great
I,
stuff.
I, I don't like the underhand nature of it, right? Like everything else is okay, but I think the way that they're gathering information on people is um is a little bit underhand, right?
Well,
I mean,
welcome to the New World Order, One World Order system, process, whatever you want to call it. It's I think we're heading towards a cashless society. Everything's going to be fingerprinted. Everything's going to be cashless. If you're on a salary, good luck getting paid in cash. You're probably going to get it into your bank account, and before it comes to your bank account, it's going to be automatically. It will automatically have tax deducted. Anything that they owe to you, they'll probably refund you later down the line. All your bills are going to get paid automatically. All your taxes are going to get paid automatically. And by the end of it, you'll have a pot to piss in, which is probably your own little money in a piggy bank once you've been shafted by all these various taxes. But I think that's the state that we're heading towards, unfortunately. But there you go. Even if you fly, you're going to get penalized for flying too often, I guess. If you drive too many miles in a given year, well, you're going to get less points. So we're moving to this brownie point system, girl guides, bullshit. It's, I don't know. It feels very dystopian to me. We're heading to this dystopian type world of the
you
way
will
in
own
which we
nothing
live.
and you'll be happy.
Well, yeah, you'll own nothing and you'll be happy, apart from a pot to piss in. But that's it, really. So my advice is learn how to grow your own. I'm not talking about cannabis, but I'm talking about, get an allotment, get a few chickens, get some greens growing, and you probably give yourself half a chance.
Well, what I'd say is, I don't know, man. I think, look, learning to trade, and I mean, look, there's a reason why people get into markets, don't they? They see it as a kind of
Yeah.
option that there's an opportunity there, right? And I think it can be a life raft, right? Especially with the way that things are going, right? I mean, like I think everyone can see it, right? Things don't seem to be getting any better out there, right? And society is slowly kind of collapsing around everyone. And if you're not someone, if you don't reach a point where you're an asset owner, right? You're the one who's going to get shafted, right? So you have to be in that kind of asset owning category in order to be considered anyone, right? And so, look, trading can be your life raft, right?
Yeah,
And, and
yeah.
and it does give you an opportunity to kind of and it does give you an opportunity to
It's
get there.
it's a tough bastard to crack. I'll say that much. But I think once you kind of get the gist of trading and it clicks, you start seeing a level of consistency. Then and some profitability, of course. Then it does start becoming enjoyable. But it's a hard road there, and I think that's a perfect segue onto your mentorship. Actually, Will.
Yeah, I mean, I don't agree with it being hard. That's the thing, though, right?
I no, you may
Yeah, I
not
don't think
agree.
it's hard. I just
No,
think I think there's a knowledge gap, right? It's just like everything's hard when you don't know what you're doing, right? And you're doing everything by trial and error, and you're trying to figure things out. But the problem with doing everything by trial and error is that when something is working, you don't know why. And when it's not working, you don't know why, right? Because everything is just a best guess, right? And I think that's what makes things incredibly difficult at the learning stage, right? And I think there's only kind of, either you're the kind of person who will figure it out all by yourself, right? And I think that's okay. Sometimes people do, right? But then I think for most people, when it comes to learning any skill, right? Like, when you're in IT, you kind of learn by doing, but as well, you have to have a little bit of pupillage, right? Where
Yeah.
someone who knows kind of says, well, you've got to do it like this if you want to do it properly. And it's the same when you're becoming a doctor, and it's the same when you're becoming a dentist and an engineer, and basically any profession. And I think trading is one of those professions, isn't it? Where
It is, yeah.
if you're shown how to do it, then it's easy,
Yeah.
right? And if you're not shown, it's getting kicked in the ball. You're getting kicked in the balls every day,
Yeah, you are.
right?
Yeah, you are.
And you just have to keep taking the pain, right? But the problem is just because you've never been shown how,
Yeah.
right? And that leads into where you want it to get to.
Yep. Which leads me into your mentorship, which if you want to give us a quick TLDR about the
Yeah,
mentorship.
nice, yeah, nicely set up into that, right?
Yeah, yeah.
So, yeah. Right. So look, guys, I do have a mentoring program, right? Details are on my website. It's WMD4X.com. If you check my Twitter bio profile, the link is in there. My mentoring program is a little bit different, right? You might already kind of have a sense of that, right? But it has a couple of elements, right? The first part is where we spend 3 days together. It's literally together in person. And what I will do is walk you through framework, process, business model, risk management, systems, strategies, market environments, right? Just everything. It's like a huge data dump, right? Where you get given a lot of information and knowledge. And then after that, after those 3 days, we kind of walk away, and then you get handheld through the process to apply the systems and the strategies that I've taught you, right? And once you've been handheld through even just one or two trades, it tends to make all of the difference, right? And we keep doing that until you're able to do it on your own, right? So that's a summary, right? But you can check out the details, links in my X bio, and you can check the details on my website. And then if you're interested, just drop me a DM or an email, and we can look at lining something up.
Yeah, fab stuff, Will. Well, I think that we should wrap it up. It should have been a short stream. It's still a fairly short stream, like 3.5 hours, according to my standards. So thank you, Will.
We've almost broken like the record with Ninja Scalp, man, because I'm pretty sure one of those streams kept going
Yeah.
for about 4 hours or 5 hours or something like that.
Yeah, I don't think my earpods can last that long, unfortunately. Yeah, I'm surprised it lasted this long, if I'm honest with you, but there we go. But no, Will, honestly, it's been an absolute pleasure having you on. I think I'm actually really
Thanks for having
pleased to have you on, because it's just re-emphasized the importance of, whilst I'm heading into the new year, you know, we're 4.5 weeks, 5 weeks out from 2026, and this is generally the time where I really slow down my trading. And once again, you've just shown me the importance of the monthly open, the weekly open. And sometimes when I go back to the foundations and I think, God, sometimes if I just keep it simple, which I try to do, the context is very clear. It doesn't get any more simpler than that from a high time frame context point. And when you go back to basics, that's kind of when you generally do quite well. So thank you for that, Will.
You're welcome, man. Thanks for having me on, bro.
All right, so a special thank you to everybody who's left, who's awake still and tuned in. Thank you ever so much for tuning in. Really appreciate you all. Like I said, in terms of access to the free private mentorship, which I'm running in partnership with Prime, please check out my Twitter page tomorrow. There'll be a link on the link tree. I'll just show you where that is. In here, come to my Twitter page, click on the link tree. There will be another section or two sections, one for signing up with Prime. And then once you've done that, probably you're better off reading the Google form. I'll just leave the Google form and the link to Prime here. And then hopefully I'll start adding people into the group as of next week. That window will be open for the best part of 10 days, and then I'll probably close that window again. But apart from that, thank you, everybody. I wish you all the best. And hopefully I'll catch you on the next stream in December. Okay. So I think that's it, folks. Take care. God bless. Have a good week. Will, if you just bear with me a second, I'll end the stream.